So good afternoon folks and welcome back to class. This session is a really special session on DT. We are looking at the CA Inter fast track course for May and November 22 both. So today's session is going to be on a couple of topics which are as under. The first one which we are aiming for is PGBP. Guys, we just finished IFOS yesterday and PGBP is something that is going to be very helpful. And it's very similar to what we've done in IFOS. So here we go, that is PGBP. Next, after that, of course, we'll finish the entire concept with sections. We'll look at the module and then over to the next one. Just one second. Will be a chapter called set off and carry forward. That is what is going to happen in this session, yes. And we might move to capital gain. That is the agenda for this, the next 2.5 or 2 hour 45 minutes or 2 hours 50 minutes that we have with us. When we come back from the break, if the schedule permits, we will, and if this is over, then we will move on to salaries. Then after salaries, we will move on to deductions and we will move on to TDS, TCS. That is TDS, TCS advanced tax. That's the agenda for me, for you, for everyone, but let's see how that spans out in today's session. Alright, so with all the good luck and enthusiasm and all the attention, let's start, guys. PGBP. Guys, profits and gains from business and profession is never asked directly. It's always asked indirectly. I'll tell you what do I mean by indirectly. Indirectly basically means that they don't want to ask you, they don't want to give you incomes and then they don't want to give you expenses. They will always give you a ready-made income and expenditure statement, cash statement, etc. And we need to work around, we need to correct it, or we need to see how that works around. So in PGBP, the first question, that is question number 1, which is for 14 marks, will definitely have PGBP if nothing else. In PGBP, they will give a person like me, Sourabh Mutha, and they will give an income statement or a receipt statement if they are following cash system of accounting, and they will give an expenditure statement or they will give a P&L. In that they will give you different incomes. They will also give you different expenses and they will give you a profit or a loss here. You have to start with that profit and then work on it. Once we finish PGBP, I'll show you what kind of questions are expected, but that's an indirect way. Whatever incomes are not from PGBP, you will remove it and you will put it in the respective heads, or if they're exempt, then it will not be taxed. And whatever expenses are personal, not allowed in PGBP, you will remove it from here and put them under respective heads, or you will disallow them. That's the idea. Welcome back to class, everyone. Let's do this very well. PGBP is an important topic, but I'm very happy we've done IFOS because IFOS is a distant cousin of PGBP. So if you understand PGBP, you understand IFOS, and if you understand IFOS, then you understand PGBP as well. So it's basically similar to each other. Alright. So here also we will have incomes, yes. Here also we will have incomes. Here also we will have expenses, yes. Here also we will have expenses, just like IFOS. And incomes minus expenses will give you PGBP, yes. It could be a profit, hopefully, or a loss, unfortunately. While you do this, SAP minus SEP is salary, abhi. Little too early for that shortcut. But anyways, once you finish this, there are some disallowances here also. In this, there is maintaining books of accounts and audit also. And then there is presumptive income also. So it's a slightly bigger chapter that way. Let's look at the first introduction, that what is business and what is profession. Guys, business and profession honestly are different. My CA firm is a profession, but if I have an e-commerce business, that's a business. So business and profession are different, but for PGBP, they are both the same because they are both taxed under the same head. Anything that you do as a business, example, renting of houses, if I do as a business, it is PGBP. If I rent out one-off, then it's IFHB. If I trade in shares as a student or as an investor, then it is IFOS. But if or capital gain, if I trade in shares every day, then it is PGBP. So PGBP depends upon what you have decided. There are 3 kinds of businesses. One is called non-speculative business. What I am doing right now, teaching, is a non-speculative business. or which the government doesn't like too much, there is a speculative business. Speculative basically means when you're buying and selling on the same day without taking delivery, or on the next day also but without taking delivery, that is speculative business. And there is a business which the government loves and which they tell you to develop, which is called specified business. So there are three businesses. I want to tell you a little about speculative business. If you buy and sell on the same day without taking delivery, or on the next day also but without taking delivery, that is speculative business. But for some people it is not speculative. Example, when banks do it, it's their business. Banks, financial institutions, it's their business. When companies which are mainly engaged in share trading, they do it, that's a business, normal business for them. Then if you engage in futures and options and derivatives, in that case it will not be considered as speculative. So although these people, they do share trading etc., it will still be considered as normal non-speculative business. So speculative business, there are exceptions. Business, if you're a bank etc., if you're a company which is engaged in trading of shares etc., and futures, options, derivatives, all of these are businesses, but they're not speculative, they're non-speculative business. Perfect. So that's the idea behind this. Now let's move ahead to incomes. The first section, hedging, yes, absolutely right, hedging is non-speculative. The first section, which is the charging section, is section 28. It takes all the different incomes, and there are many incomes. Example, painkillers, there's a shortcut. I'll just upload the quick book so we don't have to write the shortcuts. 1 minute. Here we go. So we are looking at PGBP. Perfect. Guys, this is a shortcut for remembering the different incomes that could be under PGBP. Painkillers can always effectively benefit people, cure knife cuts and bruises, because this is based on the life of a surgeon. He used to always give painkillers, and that's why the shortcut. Remember guys, some of them are very simple, some are very particular, remember them. First is any profits or any gains. Example, when the doctor charges his fees, that's under painkillers, that is profits and gains. Next, any contract, C is for contract, but if it's a business contract and it's been terminated or it's been modified and you get some compensation, that is taxed here. Associations like ICAI etc., when they provide some specific services to their members, then they will be taxed under PGBP. This one is important. If you have any import entitlement, example, you export a lot and because of that you get some cashbacks etc., or some import benefits, then in that case, if you don't use it, you can sell it. This is like a voucher. If you don't use a voucher, can you sell it? Yes. And when you sell it, it will not be under capital gain, it will be under PGBP. Next, this is a benefit. Guys, in gift taxation, when someone gives you a gold, when someone gives you shares, you're taxed in gift. But if someone gives you gold and shares because of your profession, you did something really nice. A surgeon actually did a surgery for the politician and the politician gave him 4 kgs of gold as a thank you gesture. This will be taxed here. Next, very important, all these the ones which I'm marking here are very important. Next is when partners get salary. In that case, just 1 second. Just 1 second. Okay, so next is partners. When partners of a partnership firm get salary and interest also, guys, generally where would you tax salaries? You would tax them under salary head. Where would you tax interest? You would tax it under IFOS. But if you are a partner getting partnership firm profit, salary and interest, it is taxable here. Very important, guys, do not forget this. Next, this is any non-compete fee. When you don't do something and you are paid in relation to your business or profession, that's non-compete. Example, if I work for an academy and let's say I stop teaching and they pay me for not teaching, then in that case, that is a non-compete fee, so that I don't teach somewhere else. Next is Keyman Insurance. Keyman Insurance, I told you, if the company gets the money themselves, that is Keyman Insurance. Next, this one is basically conversion. You are doing a business, so you'll have stock. But if no one is buying the stock, you can convert it into capital asset, and this conversion is taxable, yes. But at what value you will convert it? At what value you will tax it? You will take the FMV. We will see more about it. And last is specified business reversal. We will see this in 3580. Okay. So guys, here I'll just repeat what are the main things what you should remember. First is partners getting any salary and interest is taxable here. Next, any benefit relation to your business is taxable here. Any conversion of stock to capital asset is taxable here. These are the main points, yes, and any export benefits are also taxable here. These are some of the main elements that you should remember. Now guys, if you do any business, do you incur expenses as well? Yes, you also incur expenses. So the Government Income Tax Act says that 29 section is the computation section, which says take our incomes and minus the expenses from section 30 to section 37(1). That is what section 29 says. So section 29 is more or less a very useless section because it only tells you how to compute, which you already know. Now comes the main part of PGBP, that is the expenses. Guys, if I am running this academy, or if I am teaching, or if I have a CA firm, I have many expenses. Let's list down common expenses. Guys, can you list down common expenses of a business? I would say rent, I would say electricity, I would say salary. Any other expense, guys? If I've taken any business loan, the interest. If I purchase goods and sell, the goods cost. Any repairing, yes. Any insurance, yes, because these I have to pay. But guys, any depreciation also, yes. But what if I buy a video game for my house, or what if I buy a plasma screen for my house? Can I take depreciation on that? No. So in this, guys, nothing which is personal, please remember this is the golden rule, and nothing which is personal. If I pay some bribes to some officers, can I take that as a deduction? No. Nothing that is illegal. If I pay some income tax penalties, nothing that is illegal, nothing that is personal. And if I build a school for poor children in my village, CSR expenditure, nothing of that sort, because the income tax doesn't allow that. So in the exam, if an expense comes, irrespective of the section, whether you remember the section or no, doesn't matter, guys. As long as you remember, if it's an expense that is revenue in nature. Guys, what is revenue in nature? Revenue in nature is basically painting my walls is revenue. But adding another floor to my office, that is not revenue, that is capital, that you cannot debit, you will only get depreciation on that. And guys, overall, this is the rule. If these are the things, then you should keep in mind the golden rule. If you don't remember the section also, it is okay, as long as you remember the golden rule. Perfect. Now moving ahead to the details. Here we go. Just erasing this. Just checking the recording is also on. Yes. Guys, we start with the sections, but just giving you a simple warning. Doesn't matter if you don't remember each and every section. If you should try, but if you can't, it's okay, because these sections are important, yes, but the golden rule is even more important. Guys, this is section 30. This is for the first thing, that is RRTRI for land and building. What is RRTRI? Rent, rates, taxes, repair and insurance. Again I repeat, the rent you pay, the rates and taxes that you pay to the government, the repairs and the insurance for land and building, all of that, guys, should be connected to your business. It should not be personal, it should not be capital. Next section is 31. 31 is the similar thing, but for plant and machinery and furniture. So in my office, my furniture, in my office, my laptops, etc. All that, if I do repair and insurance, then only RI, yes, only RI, then it is under section 31. So very simple sections. Next, and one of the most important, is section 32(1), which is depreciation. In depreciation, first there is a twin test. Can I take depreciation on this laptop that I'm just using? Yes, because I should be owning it, plus I should be putting it to use. Guys, remember this put to use concept is only for depreciation. So I should be owning it, yes, and I should be putting it to use. Only then can I take depreciation, yes, only then can I take depreciation. Next, if I bought a new asset and I have put it to use after 3rd of October, so till 3rd of October is different. You have to remember, after 3rd of October, you get half year's depreciation only. So this is an explanation to section 32(1), which says that in case the asset is put to use for less than 180 days, they don't say 3rd of October, 4th of October, that is for you and me. In case the asset is put to use for less than 180 days, then you get half year's depreciation. So if I buy a new asset, this is not for old assets, if I buy a new asset, I have to put it to use by the maximum is 3rd of October. If I put it to use after that, then that's a problem. Just 1 second. Alright. So ownership and putting to use is a twin test. After 3rd of October, if you put it to use, then it's less than 180 days, and hence you will only get 50% of the depreciation rate. And guys, yes, you cannot depreciate on any rates. You can only use the rates given by the Income Tax Act. In the exam, guys, you have to be careful of two things. First, whatever depreciation they've given, if they say that is as per books of accounts, then you have to consider that is wrong. You have to add it back and you have to minus the right depreciation, unless the exam question says that the books of accounts and the income tax rates are the same. Else, guys, you will have to calculate the right depreciation. What are the different rates? There are 4 categories of assets. The first category, which is my favorite, is building. Land is never depreciated, so this is building. Then there is furniture, then there is intangible assets, and then there is plant and machinery. 2 major changes. First up, now there is no goodwill in intangible assets, so goodwill is not depreciated anymore. So in the exam, if they have goodwill, please don't depreciate that. Building rate is 10%. If the building is used for residential purpose, how can a building used for residential get a PGBP deduction? Sometimes business have their staff quarters. Reliance has staff quarters for the employees. So those kind of residential building will get 5%. And you have a temporary shed. If you have, like for metro construction, they make a temporary shed, that is 40%. Furniture is again very simple, 10%. Intangible assets is also very simple, 25%. So plant and machinery is the main thing. Yes, plant and machinery is the main thing. So in plant and machinery, normal plant and machinery, general plant and machinery is 15%. Motor car or motor vehicle is also 15%. But if motor car is used for running on hire, then it doubles up, then it becomes 30%. So motor car have 2 rates, motor vehicles have 2 rates. Ships go slow, so hence 20%. Flights go, or planes, airplanes go fast, so hence 40%. Anything that depreciates faster, like books, they get old fast, so 40%. Computers also get old fast, so 40%. Next, guys, anything which is good for the environment, like pollution control equipment, 40%. Like windmills are also 40%. Oil wells are still at 15%. Oil wells are considered with plant and machinery. These are the main things that you should remember. In the exam, if there's something very different, they'll give the rate. Otherwise, these are the normal rates. Alright. Now, can you follow any method of depreciation? No. They say that section 32(1)(2), which is the most common one, is called WDV method, or written down value method, where they don't focus on individual assets. So what do they focus on? They focus on something called block of assets. And that block of assets, this block of assets, just 1 second. This block of assets is like a family of assets, guys. So what is a block? Block of assets basically is a concept which is under section 43(6). So 43 is also in PGBP. Yes, it's a far off section. You don't have to remember, just have to remember the concept. What is a block? A block is like a family. So there will be an opening block. Example, let's say ambulances. The surgeon had 4 ambulances. So that is the opening block. If he purchases another ambulance, then it will be added. Yes, it will be added. What will be added? The cost will be added. And if he sells any, then it will be minused. Yes, simple, guys. All you need to do is do this mechanical process. To the opening block, whatever you purchased you will add, and whatever you've sold you will minus, and on the balance you will maintain depreciation. But just remember, if you've purchased something which is put to use for less than 180 days, then you have to give only 50% to that value. We will do depreciation sums, don't worry. Also, some more details I want to give you. Guys, whenever you purchase something, you should not be paying in cash more than 10,000 per person per day. You know the cash limit already. Perfect. Now, what is block of asset? I'll give you some more detail. Buildings which are at 10% will be one block. Furniture which are at 10% will be one block. Plant and machinery which are all at 15% can be one block, but computer which is 40% will be another block. Intangible assets will be another block. So what does block of asset mean? Block of asset means that Infosys has lakhs of laptops. Guys, will Infosys, whenever they sell a laptop, will they calculate capital gain that, oh, one laptop is sold? No, they will not do that. They have lakhs of laptops, Infosys. So hence what they will do is whenever they sell one laptop, all they will do is reduce it from the sale price. So the final value reduces and your depreciation indirectly reduces. So that's how they actually calculate. Perfect. So this is block of asset. This is WDV. Is WDV compulsory? Yes. Only one person has an option of SLM method, which is honestly my favorite. Whenever I was doing accounts in college, my favorite method was SLM, straight line method, because it was the same amount of depreciation every year. But in reality, SLM can only be used by, that is section 32(1)(1). It can be only be used by power generating, power transmission, power distribution companies, and that too, it's an option for them. If they want, they can do it. Otherwise, it's an option, they can do WDV. Why will someone want to focus on individual assets? WDV is very convenient to do it from a business perspective. But let's take one example of this, because there are two sections attached to it. So let's say you're a power company, you're not a surgeon anymore for 2 minutes, and you've bought some equipment for 1 lakh rupees and you've depreciated for 2 years, let's say 10,000 and 10,000 you've depreciated. So now the value of that asset in your books is 80,000. Now this asset you are selling. Now first of all, this depreciation is SLM, and I have used SLM under section 32(1)(1) in case you want to remember section. Otherwise section 32 also works. And when you sell this asset, let's say if you sell it for 75,000, then this is a loss, because 80,000 asset being sold for 75. So this is called terminal depreciation or the last depreciation. This 5,000 of loss will be called terminal depreciation, and this is under section 32(1)(3). This is only for people who want to remember all the section. Otherwise guys, just remember the concept. Not an important concept. WDV is more in focus, but you should know it. And if you sell it, let's say for 92,000 rupees, then that 12,000 rupees is an income which is called balancing charge. So just repeating this, and this is under a section called section 41, which we will see in PGBP head. Section 41 too, guys, just gentle reminder, sections are important, but they are not the most important. First, the concept is important. So if you have an SLM asset, you depreciate it every year, and if you sell it at a loss, it's called terminal depreciation. If you sell it at a profit, it's called balancing charge. Perfect. If building with 5% and 40% same block, no, block means same type and same rate. So if there is one building which is at 5% and one building it is 10%, they will have 2 different blocks. Perfect. Guys, just 1 second. All right. Now guys, moving ahead, this is SLM, but SLM I'm not focusing on because even the exam does not focus on. So focus will be on depreciation. Remember WDV rate. Remember, you have is depreciation compulsory? Yes guys, depreciation is compulsory. So can I forget depreciation on a particular asset? No. If you've forgotten, you'll have to calculate it. Depreciation is compulsory. And then depreciation is as per these rates, they are on block of asset method. But guys, what cost can I take? For that guys, they have put a section for cost of acquisition. Why have they put a separate section on cost, guys? Because guys, the higher the cost, the more the depreciation, and hence people can manipulate the cost. And that's why they put a section called 43(1) for cost of acquisition. The entire section is not important from your exam. I'll tell you the more important sections. The first explanation of 43(1) says that if you buy any scientific research asset, we'll see ahead in scientific research expenditure that the moment you buy a microscope for scientific research, you get 100% deduction. So the value becomes 0. We'll see it ahead and you will link this section to scientific research. Otherwise guys, let's say I have bought an asset and I have bought that asset on a loan and I pay interest on that loan. So there is an explanation called explanation 8. I call it 8% interest. If I have paying 8% interest on the asset, till the asset is put to use, the interest will be added to the cost. Yes. I repeat guys, what are we doing? We're doing a small section called 43.1, which is cost of acquisition. Important? Not really. But guys, because cost can be manipulated, the Income Tax Act has said that listen, we are telling you how to calculate the cost of an asset. When you purchase an asset and it is on loan, then the interest you pay will also be added to the cost, but only till the date you put it to use. After that you can't. Next, if that asset has been imported and you have paid 9% import duties, explanation 9 is 9% import duties, then those import duties will also be added. Yes, unless you take credit guys, you know GST credit. If you've taken a credit, that means you've paid and then you've taken the credit, so you cannot add. But if you don't take credit, you can add. Yes. And there's an explanation called explanation 10, which says that if the government gives you a 10% subsidy, that's only an example, remember the explanation. If the government gives you a subsidy, then you haven't paid that much amount, so that will be reduced. Yes, subsidy will be reduced. And last one more section which is important, that is explanation 5. Guys, I am giving you an example. Tell me how that will work. Guys, I have a car which is for personal purposes. I use it only for personal purposes, but I want to start a travel company and I introduce that car as an asset. Earlier, the car was bought for let's say 10 lakh rupees and I was using it for personal purposes. Now, can I introduce it to business guys? First tell me yes or no. Can I introduce my personal car into business? Yes. Now that I'm using it in business, will I get depreciation on it? Yes. At what rate? Also we know 15%, but what will be the cost? I bought the car for 10 lakh, I used it for 1-2 years and now the value is 7 lakhs, but they don't care about 7 lakhs. They say, have you taken depreciation on 10 lakhs? No, because in personal purposes you don't depreciate. So the government says we don't mind you taking 10 lakhs as the cost. So any asset that you were using personally, which now you have introduced in your business, you can take the actual cost. Yes, you can take the original cost. Why? Because in personal asset, when you were using it personally, did you take depreciation deduction? No. So now you can take. Only in case of building. If I have a building guys, and that building earlier I used to stay in, now I made it into my office. Can that, guys, please be with me. Can I take my personal building and can I convert it into my office business? Yes. Will I get depreciation? Yes. What rate? 10%. Now what will be the cost? I bought that building for 1 crore. No, only in this case you will not take the original cost. You will take the original cost and you will minus notional depreciation of how many ever years you've used the business or used the building. So only for building there is notional depreciation. Yes, only for building there is notional depreciation. So guys, this is the concept of depreciation. I'm just reading. Depreciation is non-cash expenditure. They should follow the twin test, ownership and put to use. There are 4 categories of assets. Depreciation allowed as deduction only on the rates laid down in the Act. Rates of depreciation are as under. I've given the major rates. Next, explanation, assets put to use for less than 180 days. And one more explanation guys. If today there are some assets which are with you, this is you, this is the surgeon, and he sold this business to a hospital chain. He sold it and he sold it on the 1st of Jan during the year. So then guys, will there be depreciation? But who deserves the depreciation? Will the surgeon get it or will the hospital get it? They say in cases of amalgamation, sale, merger, etc., calculation depreciation normally like this did not happen. And then just bifurcate the depreciation based on number of days you used it and number of days the other person used it. In case of amalgamation, etc., depreciation to be calculated normally, ignoring amalgamation, and then such depreciation to be bifurcated between the two companies based on number of days of usage. Section 32.1.2 is WDV method. 32.1.1 is SLM. Land is never depreciated. Depreciation will be allowed even if the asset is given on operating lease to someone. That means guys, very interesting question. Please tell me, I own a plant and machine, I own a crane, but I have given it to you for renting. I have rented it out to you and you pay me rent. Will rent be allowed to you as a deduction? Yes, because that's your business expense. And can I take depreciation on that crane? Yes, because depreciation is given only to the owner and I am the owner in case of operating lease. Alright. Now guys, there's a very interesting concept on additional depreciation. Guys, is depreciation a good thing? Yes, depreciation is a very good thing because you don't have to pay money and you get deduction. So the government says that let's use it as an incentive. So they said that if you are into manufacturing of an article, or if you are into power generation, power distribution, etc., if you're into manufacturing or in power, then in that case, what you could do is, if you buy any new plant and machinery, not new building, not new furniture, not new intangible asset, only new plant and machinery, then of course depreciation you will get anyways, but we will give you a one-time depreciation of 20% additional. Yes, 20% additional depreciation. Hence the section also is, guys, 32(1)(2)(a), 20% additional. And that's the shortcut. Again, repeat, 32(1)(2)(a). How do you remember? 2 is 20 and A is additional, 20% additional depreciation. Is it every year? No, it's a one-time depreciation, guys. It's a one-time additional depreciation. Only once you get it. Yes, only once you get it. The year you buy it, yes, and put it to use, yes. But if I put it to use today, guys, on the 2nd of March, then don't worry, because in this year you use it for less than 180 days, you will get 10% this year, 10% next year. So remember, if an asset has been bought last year, guys, can I get additional depreciation this year? If an asset has been bought last year, can I get additional depreciation this year? Yes. If last year you got only 10%, then this year you will get 10%. Great. So let's buy a fancy sports car for the CEO. Sorry, additional depreciation is on plant and machinery new, but on some you will not get. First, you will not get it on old. Old means what in India also old, second hand is not allowed, and even abroad if it's second hand and you bring it to India, even that is second hand. Old means owned, whether it's India or abroad, both are old, India or abroad. Old means old, old is not allowed. Next, in plant and machinery, on car, motor vehicles, aircrafts, etc., it is not allowed. On office appliances, example computers, ACs, etc., it is not allowed unless I put that computer in my factory. So guys, this additional depreciation is given for manufacturing for your factory, not for your office. If you buy new ACs for your office, can I take additional depreciation? No, not on office appliances, not on motor vehicles, etc. Any motor vehicle, no, and not on old machines. Old means abroad also old or India also old. Nothing old is allowed. Alright, just 1 second. Perfect. So this is additional depreciation. I'm just reading it out to you. The intention is to encourage people to invest in plant and machinery to be used for manufacture or generation, distribution of power. Additional depreciation is 20%, just once will be allowed over and above the normal depreciation. Only for new plant and machinery. Guys, how will you figure out? They will never tell you additional depreciation. So if in the exam they say Mr. Ganesh is a manufacturer, then you should know he deserves additional depreciation. If used for 180 days or more, then full, otherwise half. Not on second hand, not on ships and aircrafts and motor vehicles, not on plant and machinery, not on motor vehicles, and not on those where 100% reduction has already been allowed. I'll show you what is 100% reduction. We have not come to 100% reduction till now. And additional depreciation is also available. Very interesting, guys. Even if you're in printing and publishing, guys, people generally think printing and publishing is not manufacturing, and hence they've clarified that even if you're in printing and publishing, will you get additional depreciation? Yes, you will get additional depreciation. Keep that in mind. Next, guys, this is a new business you started. So your profit was 100, but your depreciation was 120. Can you minus 120 depreciation from 100? No, they say that you can minus only 100. So what about the balance 20? The balance 20 will be called as unabsorbed depreciation. But why are we not calling it some loss? Because loss has an expiry. Unabsorbed depreciation can be carried forward to any year without any limit. This is basically someone which is immortal. Example, if I call this 100 profit, 120 depreciation and 20 is a business loss, the business loss can only be carried forward sometimes for 4 years, sometimes for 8 years. But if I call this 20 as unabsorbed depreciation, then I can carry it forward unlimited number of years. So that's a benefit. Yes, benefit. And this concept of unabsorbed depreciation is given in section 32 only, but not 32.1. 32.1 is depreciation and 32.2 is unabsorbed depreciation. Perfect. Guys, this is unabsorbed depreciation. 32.2. 32.13 is terminal depreciation, which we've already done. Now block of asset is also something that we've done. Block means the same type of asset and the same rate of asset. And please be very important, guys, block, you don't have to focus on individual asset. So if I have 4 ambulances with a block of 40 lakhs and I sell one of the ambulances for 10 lakhs, will I see how much I have made, gain, loss? No, I will just reduce 10 lakh. And next time I will depreciate on 30,000. Yes. When you see sale, you don't have to see the date also, just minus it. But when you purchase, you have to see the date because less than 180, more than 180. Actual cost, there are many explanations, but the main ones I told you is explanation 5, that buildings have notional depreciation only, others have no notional depreciation. 1 we will see ahead. Next important one is 8, 9 and 10. Alright. And now we come to one of the more important sections of PGBP, which is scientific research. Guys, in India, everyone wants scientific research to be done, but no one wants to do it themselves. Everyone wants to be investment bankers, everyone wants to be startup experts, but no one wants to do research. So the government says, listen, if you do research or if you spend on research, I will give you a lot of benefit. What is the benefit? Watch out. First, if you do in-house research, in-house means it is connected to your business. Example, you're a surgeon and you're doing research on COVID vaccine. Is it in-house? Yes, in-house means it's connected to your business. Then, on the revenue expenditure, revenue means when you pay salary, electricity, etc., you will get 100% deduction, which is anyways the case, but not only for the current year, but even 3 years prior. So if you started your business today of scientific research, that is the 2nd of March, then 2nd of March 21, 20 and 19, 2nd of March 19, from that time, even if you did not have a business which was started, you will still get a deduction this year for something that you incurred 3 years back as well. So guys, again I'm telling you, a golden rule of business is whatever revenue expenditure you incur, will you get a deduction? Yes. But only of this current year. What if I have 3 years prior? You generally don't get it, but for scientific research they allow even 3 years prior to commencement. Yes, 3 years prior to commencement. But this is a okay benefit. The main benefit is of capital expenditure. So if you incur any capital expenditure except land is not allowed here. But if you, let's say, buy a microscope for 1 lakh or you buy a machine for 10 lakh for scientific research, you don't have to wait for depreciation. You will get 100% deduction immediately. Yes. So if you buy a microscope for 1 lakh rupees, this is your cost of purchase. You will take 1 lakh and you will minus section 35 deduction of the entire 1 lakh. So what will be your cost of the asset? The cost of the asset that will go into the block will be 0. Is this a benefit thing? Of course, guys. Otherwise, if you're not doing scientific research, you would get depreciation of 15% and you would have to wait for almost about 8 years to take the entire 100, almost entire 1 lakh. But here in the first year only, you get a deduction under section 31, which is 100% deduction. This is the benefit. This is not given for land. And good part is even this is given for 3 years prior. Guys, just I forgot to mention, for revenue expense 3 years prior, it's only for raw material and salaries. 3 years prior is only for raw material and salary. So if you do any in-house scientific research, please tell me in the chat box, guys. If you do any in-house scientific research, do you get benefits from the government? Yes. It should be connected to your business. Yes. On revenue, do you get 100% always? Even 3 years prior? Yes, but 3 years prior only raw material and salaries. And for capital expenditure, do you have to wait for depreciation 15%? No, you will straight get a 100% deduction. Yes. So now how much is the microscope's value? The microscope's value is 0. So the government gave you a deduction 100%, yes, but the government is expecting you to start a business of scientific research. But guys, your research was not successful, or even before starting your business, you decided to sell the microscope. Guys, can you sell the microscope? Yes. You bought the microscope, you took a 1 lakh rupee deduction. It's almost like when you join articleship, guys, will you get a laptop? When you join articleship, will you get a laptop? Yes. But do you have to promise that you will use the laptop mainly for office work? Yes. But here also, when you bought the microscope, did they give you a 100% reduction? Yes. But you had to use it for business. If you sell it before the business starts, will the government feel bad? Yes. Imagine, guys, you start articleship, you are given a laptop, and within one month you quit the job. Will your employer say, give me my laptop back? Yes. Same way, here also they will say, how much deduction how much deduction did you get here? You will have to give it back. So if you sell your microscope for 70,000 rupees, this amount you will have to reverse it in PGBP section 28. Remember the last B, I told you it will come ahead, so it is here, but anyways, doesn't matter. You can think about this as a reversal. So this is almost like giving your laptop back. I'll repeat again, guys. When you bought the microscope, did you get a 1 lakh rupee deduction? Yes. Now if you sell it before you put it to business use, then the government feels bad, and this 70,000 will be reversed in your PGBP. But guys, what if you sell it for 1 lakh and 5,000? Then up to 1 lakh it will be reversed in PGBP, and that 5,000 will go into capital gain. Perfect. This is before you start. But what if you start the business and after that you sell the microscope? Then no problem, the government has no problem. And once you start the business, guys, will you have a block of asset? Yes. So you will just minus the sale price from the block. So after the business, is there any problem, guys? After the business starts, is there any problem? No. Only if you sell it before, then it's a problem. So 1 lakh up to the cost, you will reverse it in PGBP. Above the cost, you will take it to capital gain. This was something that was tested in one of the exam papers that we will see ahead when we take a break and we come back. So that is what we will see. Alright. So this is section 35, guys. 35. Which is in-house, not deductions for donations. Here we go. 35.1.1 is for revenue expenditure, current year as well as 3 prior years, and capital expenditure 100% except land you will not get. And if you sell the scientific research after being put to use, then you will reduce it in the block, but before, then you will reverse it in PGBP. As this reversal is under section 41.3. I'll tell you 41, and there are some shortcuts also for 41. But remember, this reversal, it's almost like you joining articleship, you getting a laptop, but you quitting articleship in a month, so you will have to give the laptop back. Alright. But guys, what if you're a CA firm? Guys, for a CA firm, can they do any in-house scientific research? No. But what if I want to donate money to a scientific research association? Or what if I want to donate to Baba Ramdev's company, whose main objective is scientific research and it's an Indian company? Or what if I want to donate to social and statistical research? Or what if I want to donate to a USIN, university, specified person, IIT and national laboratory? Can I donate money, guys? Yes. Guys, generally donation, please tell me, is this donation linked to your CA firm? Is it linked to your business? No. So you should get a deduction in 80G, but the government says that this one you will get a deduction right here, 100% deduction. As long as these are all approved, this is an Indian company with the object of scientific research, these are all approved, you get a 100% deduction, yes. But what if the approval is withdrawn later on? Then you don't have to bother, guys. Even if it's withdrawn later on, you will not be bothered, you will get a deduction even then. So what you give a donation and then it was withdrawn the approval, it's not your problem, so you can still take a deduction. So this is outside. Guys, I always will discuss scientific research as in-house and outside. Outside is this: deduction given to a specified association, to companies, to social research, statistical research, and to USIN. All these will be allowed as a deduction, yes. Even if the approval is withdrawn, yes. This guy's concept is a concept of section 35 scientific research. Is very, very important, because generally when I donate to PM CARES fund, can I take it as a deduction in PGBP? No. When I donate money to, let's say, a child relief and you, no, I can't deduct in PGBP, but only in scientific research if you if you donate, you can take a deduction, yes. That is section 35. Now guys, the next section. Guys, is it possible for you to expand your business into a new business? Yes. Is it possible for you to start a new business also? Yes. So the surgeon started a new business called Dial a Doctor. Dial a Doctor. And this was a very innovative business where you could phone a doctor and he would treat you on the phone. So this was a new business he was setting up, yes. And he incurred a lot of expenditure. He did not know whether the project will work, so he created a project report. He asked someone to make a project report. You all seen Shark Tank, guys. You know what a feasibility study, project report, assumptions, etc. are now. So then he asked someone to make a feasibility report, whether it is feasible. Then he asked someone to make an engineering study. And then he asked someone to do a market survey, that will the people who come or this business is going to be a flop. And he spent on all this, he spent 50 lakh rupees. But the business is not yet started. Will he get a deduction for this, guys? No. This is called preliminary expenditure. Then he also did some expenditure on AOA, MOA, setting up the company. He also did the expenditure on share issue, share application, share other expenses. He also did some advertisement expense to test how the people would react. And he spent, let's say, 30 lakhs on this also. This also is called preliminary expenditure. The government said, listen, this expenditure is before you started the business, we will not give you a deduction. He said, please give it to me, it's connected to my business. They said, okay, we will give it, but we will divide it. D is for divide, D is for dial a doctor. They said that this amount we will give you in 5 equal installments. Yes, that means, guys, we will divide it by 5 and we will give you 1/5 every year, the year you start your business and the next 4 years. This, guys, is section 35D. So will I get entire 50 lakh plus 30 lakh, 80 lakh? Yes, you should, but they have put a limit on how much you can get. The limit is 5% of cost of project. So whatever is your cost of project, cost means your land cost, your machine cost, your furniture cost, all the assets put together, including land, yes, 5% of that. And if you're a company, then 5% of capital employed. Capital employed means equity share capital, preference share capital, debentures, loans. And if it's a foreign loan, make sure it's more than 7 years, only then you will be able to include it. So guys, capital employed means shares, preference shares, debentures, loans. And if it's a foreign loan, then only if it's more than 7 years will it be included here. So if this cost of project is, let's say, 90 lakhs, 5% of that, and 5% of capital employed is, let's say, 70 lakhs, which can I take? I can take 90 lakhs, yes. So higher of the two, yes, higher of the two. But what if this is, let's say, 75 lakhs and this is 70 lakhs, which one can I take? I can take 75 lakhs, and 75 lakhs will be allowed, yes, not 80 lakhs, no, not 80 lakhs, only 75 lakhs will be allowed. Alright, so just recapping 35D very, very quickly. 35D is called Dial a Doctor. It is basically for preliminary expenditures, PE. Preliminary expenditures are those expenditures that you've incurred before you start your business. Will they be allowed for your business? Yes, but in 5 equal installments starting from the year you start your business and the next 4 years. That means 20% every year, yes, for 5 years continuously. In this project FEM, that is project report, feasibility study, engineering study and market surveys have to be done either in-house by yourself or from approved concerns. But others like AOA, MOA, issuing shares and doing advertisement, those expenditures can be done by everyone, no problem. But guys, these are revenue expenditures, not capital expenditures. Then what do you need to take? You need to add these up and do 1/5. Yes, but there is a limit up to which you can take, not unlimited. Yes, what is the limit? 5% for cost of project. And if you're a company, then 5% of capital employed, whichever is higher. What if you're not a company? Then only this. What if you're a company? Then this or this, whichever is higher. So this is the concept of section 35D. This is preliminary expenditures. Just reading it from here. PE is generally incurred before commencement of business or extension of business. The same is allowed as a reduction in 5 equal installments over 5 consecutive years, except for foreign companies. So this is only given to Indian companies. The expenditure can be maximum higher of 5% of cost of capital employed or 5% of cost of project. If entities other than company, then only 5% of cost of project. Capital employed is paid up, preference, debentures, loans. In case of foreign borrowings, then only if it's for more than 7 years, then you include it. Yes. Cost of project is the actual cost, not WDV, etc. Actual cost of all the assets for this business. And yes, guys, this 5% of capital employed and cost of project, guys, cost of project changes throughout the year. So will you take the starting value, ending value, the year you start the business, the last day of that year, 31st March, yes, 31st March of that year. So the year you start this new business, that year's last day, those values you will take. And if it's project firm expenditure, then it has to be either in-house or approved concern. And if it's other expenditure, that can be anyone. And guys, if in these 5 years you get amalgamated, then the next company can take the balance number of years. This is section 35D. Now guys, moving to the next section, that is section 35DDA. Guys, the surgeon, before starting his own clinic, I told you he was in a job, and he was in a job with Delhi Development Authority. Delhi Development Authority. That's a shortcut to remember section DDA. And he told the Delhi Development Authority boss that, listen boss, enough, I have worked with you enough. Now I want to start my own clinic, but I need money. So Delhi Development Authority said, listen, we are very proud of you. You want to start on your own. We have a scheme called VRS, Voluntary Retirement Scheme. We are telling you that if you want, you can take up the scheme. We will not force you, but if you want, you can take up the scheme. And under this scheme, we will pay you 50 lakh rupees today only, so that you can retire today and you can start whatever you want to start. He said, okay, give me those 50 lakhs. So they gave him 50 lakh. This is not about the surgeon. This is about Delhi Development Authority. Is this 50 lakh an expense for DDA? Yes. But because this is huge expenditures, the government says we will divide it again. This is also divide. Yes. We will divide it 1/5 in the year you pay. It's payment linked. Yes, payment linked. Even if I follow accrual basis of accounting, yes, it is payment linked. So the year you pay and the next 4 years, you will get 1/5, 1/5, 1/5, 1/5, 1/5. So this is Delhi Development Authority. Deduction will be given of the expenditure incurred on VRS by any person over 5 equal installments starting from the year of payment. Deduction of unexpired period will be available to the amalgamated entity as well. Guys, this is section 35DDA. Okay. Perfect. Moving ahead, guys. Guys, in India, we will take a break. In just let me finish the expenses, guys. Only 2-3 expenses remaining, or 2-3 sections remaining. Let's finish expenses and then let's take a break. Guys, in India, do we have many hospitals? Do we have great infrastructure? Do we have a lot of warehouses? Do we have a lot of decent hotels? No. So the government says, listen, can you please develop these businesses? So the government told us to develop some businesses under 35AD. They told us also develop these businesses, 35AD. That's the shortcut to remember. The government told us to also develop these businesses, and they call these businesses specified businesses. Now, what are these businesses? You generally don't have to by heart them because the exam will tell you that this is 35AD business. But still, if you want to remember, there's a shortcut, super fast bikes. Here it is. Just 1 second. Alright, so there's a shortcut, super fast bike can cover 3 hospitals, 3 workshops and 3 institutions. So basically super fast is slum development, fertilizer manufacturing, beekeeping This is cross country lines of transportation of all this natural gas, oil, etc. Then cold chain, then hospitals with 100 beds, hotels with 2-star. So these are basically affordable housing, warehouse for food grain, warehouse for sugar, infrastructure. So these are some businesses, but don't have to by heart it, because the exam will tell you that this is a 35 AD business. And when it's a 35 AD business, okay, so I will start this business with what is the benefit? The benefit is that any capital expenditure that you incur, example, for building a hospital of 100 beds, if you buy a building which is a capital expenditure for 70 lakh rupees, we will give you 100% deduction. So this is similar to scientific research. Yes, it is similar to scientific research. You will get 100% deduction for capital expenditure, except land you will not get, any goodwill that you bought you will not get, and any financial instruments that you bought you will not get. And if you pay cash to buy that building, you will not get if it cash is more than 10,000 per person per day. So this is similar. Yes, this is similar to scientific research. There also, as here also, and there also for the past 3 years any capital expenditure. Here in fact, if you bought the building a many years back and now you are capitalizing it in the books, that means now you are introducing the business, so then now also you will get the deduction. So for a new building that you buy, yes, and for a building that you bought and now you are introducing, yes, as long as you are putting it in the balance sheet of that business, you will get a deduction 100%. Yes. So what is the value of the asset in the block? The value of the asset in the block will be a big 0. So this is the biggest benefit. Yes, this is the biggest benefit. So if I buy a building, will I get 100% deduction? Guys, please tell me. If I buy a computer, AC, etc., will I get 100% deduction? Yes. Every capital expenditure, I will get 100% deduction. And so do I have to wait for depreciation 10, 15%? No. Congratulations. And the best part is, here you will not even, so second hand plant and machinery is also allowed, up to 20%. And if it's second hand abroad but new in India, it will be considered new. So second hand abroad also will be considered new in India. That is one exception, and up to 20% second hand will also be okay. So these are 2 exceptions. Yes, but because they are giving us such a big benefit, they say that you have to use the asset for specified business. Any specified business, yes, be it hospital, and then can I convert it into a hotel? Yes. So, but it has to be used for a specified business for 8 years. You have to use it for specified business for 8 years. What if you don't wait for 8 years, guys? It's almost like your employer giving you articleship and then giving you a laptop. Guys, how long is your articleship for? 3 years. If you leave the articleship within 3 years, will he want his benefits back? Yes. Same way, if you convert this into non-specified business, or if you sell, first let's see if you sell within 8 years. Then let's say you sell this building for 50 lakhs. Then will 50 lakhs have to be reversed? Yes, it will be reversed and it will be added to PGBP, because they give you a benefit of 80 lakhs, so they will reverse it. And what if you sell it above 70 lakhs? Then up to 70 lakh it will be reversed in PGBP, above 70 it will go in capital gain. So this is when you sell. I repeat, guys, you have to use it for the specified business for 8 years. If you sell, then whatever is your sale price up to the cost will be reversed back in PGBP, and above that will be taken to capital gain. And what if you transfer it to a non-specified business? Example, what if you convert this hospital into a shopping mall? Then whatever benefit they've given you, they will take it back. So yes, 70 lakhs they will take it back. But at least you should get depreciation, because in these years you did not get depreciation. Yes. So let's say you use it for 1 year, this building. Then for 1 year, the depreciation at 10% they will give you. So they will reverse 63 lakhs. Guys, it's not that they're very upset at you. If your hospital is not working, obviously you will convert it into a shopping mall. But whatever benefit they've given you, if you decide to quit CA and you do stop doing articleship, it's not that your principal will punish you. He'll just say that, listen, give me my laptop back. So this is the same thing which you have to do. You have to reverse whatever benefit they've given you. But of course, you will get your depreciation rightfully. Guys, this is so important that this business, because there are so many numbers, it has to be compulsorily subject to audit. Yes. If you have any specified business, then you are compulsory subject to audit it. And if you have any loss from this specified business, which we will see in set off of loss chapter, the loss can be set off only from other specified business profit. So that means a loss from specified business can be set off only against specified business profits. Let's read, guys, here. 35 AD. A 100% deduction will be allowed for capital expenditure incurred for specified businesses. Absolutely right, Nikita. Any capital expense incurred prior to the date of commencement, if capitalized, will also be allowed as a deduction. So even if you bought this building 3 years back, but now you're capitalizing it, you'll get 100% deduction. Since 100% is already allowed as a deduction, no depreciation will be allowed. No deduction for the following: land, goodwill, issue of financial instruments, and payments of more than 10,000 made in cash. Capital expenditure even allowed on second-hand plant and machinery up to 20%, and imported plant and machinery can be used. Revenue expenditure will also be allowed as a deduction, which is always allowed: salary, rent, etc. In case the above expenditures cannot be set off, the loss can be carried for unlimited years and it can be set off only against profits from this business only. However, condition is you have to use the asset for 8 years. If sold, then you have to reverse. If changed, then again reverse, but you will get depreciation. That is what it is. This last line is not for your year anyway, so doesn't matter. As this is 35 AD, important, yes. Just last 2 sections and then we will take a break, guys. This 36th section is specified deductions. Everyone watch out very, very carefully for 35, 36. Just keep the golden rule in mind. The golden rule is if any expense is linked to business, you will get a deduction. Alright. I'm telling you the first one, but ignore the section first. Section 36(1)(1). Guys, if you take insurance for your stock, if you're a federal milk society like Amul, then for your cattle, and for your employees, if you take insurance, is it a business expense? Yes. Will you get deduction? Yes. Next, if you pay bonus and commission to your employees means slaves, guys. That's how I call them, because in India they almost work like slaves. So if you pay bonus and commission to your slaves, is that a business expense? Yes. You're keeping your employees happy. So will you get a deduction? Yes. Next, if you take a business loan, guys, can you take business loans? Can you be a Vijay Mallya? Of course. And when you pay interest, pay or payable interest, can it be allowed as a deduction? Yes. How many ever loans you want? Yes. How much ever interest? Yes. There is no limit, except it should not be interest on interest. It should not be a penalty. It should not be interest on income tax. Guys, income tax is not allowed as a deduction, so interest on income tax will not be. Interest on dividend, okay. That means to pay your shareholders dividend, you borrowed money and you're paying interest, that is okay, that is business purpose. So again I repeat, interest on loan for business, can it allowed a deduction? Yes. But interest for my house, can I take it in my business, guys? Interest from my house? No. So no amount of interest, any amount of interest can be taken, yes. Multiple loans can also be minused, yes, but it should not be interest on interest, it should not be penalties, and it should be any amount of interest, no problem. Next, instead of taking a loan, can I issue zero coupon bonds, guys? What is zero coupon bond? This is a surgeon and his company, and these are investors who have the money, so he issues zero coupon bonds to them. And they give him 85 rupees per bond. Who uses the money? The surgeon uses the money. And what do the investors get? After a few years, like 1 year, 2 year, 3 year, the surgeon will pay them back 100 rupees. So did they make 15 rupees? Yes, that is their income. And did the surgeon incur 15 rupees? Yes, that is his expense. Now this 15 rupees, will it be allowed as a deduction? Interest on zero coupon bonds? Yes. But in which year will it be allowed? The first year, second year, third year. So it will be allowed, it will be spread over the number of months. So if you took the zero coupon bonds, let's say today, that is 2nd of March, then it will be rounded off to 1st of March. From 1st of March 2022, let's say you repaid them on 20th September 24. So 20th September will be rounded off to 30th September. So from March 22 to March 24, whichever months are there, based on that you will have to bifurcate them on basis of months. So in this year only 1 month, next year entire 12 months, and next year 9 months. That's how it will be bifurcated. Guys, this is section 36(1)(3)(a) zero coupon bonds. For us it is an expense, for the investors it is an income, which we will see in capital gain. Only 15 rupees 15 rupees is just an example, but yes, you will get a deduction of 15 lakhs or 15 crores or whatever is the amount over the number of months. Alright. Next, very important guys, 36(1)(4). If the employer, example the surgeon, contributes to the employee's retirement benefits, this is the surgeon, he is the employer and he has some slaves working for him. If he contributes to their provident fund, if he contributes to their superannuation fund, will he get a deduction? Yes, this is for retirement benefits. Why? Because he's keeping the employees happy, but he will get a deduction only when he makes a payment. Some of these guys are only on payment basis, which you will see ahead, but this will be given only if he makes the payment. Next, very important guys, 36(1)(4)(a). Remember National Pension Scheme. If the surgeon contributes to the slave's national pension scheme, will the surgeon get a deduction? Yes, he will, but there is a limit, and that limit is 10% of the salary of the employee. And if it's a central government employee, then 14% of salary. I keep this limit in mind, it will come again somewhere ahead. So please tell me, is the surgeon contributing to the national pension scheme of the slave? Yes. Is that keeping the slave happy and motivating him to work better? Yes. So will the surgeon get a deduction for that? Yes, but maximum only 10% of salary. Can he contribute more? Yes, but deduction will be only 10% of salary or 14% of salary. Guys, if I bribe a government official, can I take it as a deduction? No. But still, can I bribe? Yes. So can I pay more than this? Yes, but will I get a deduction of more than this? No. And last guys, 36(1)(5). Can I contribute to a gratuity fund for the slave? What is gratuity fund? Gratuity fund is like a thank you fund because the slave works with you for 5 or more years. The section is 5 and hence I use 5 as an example. Then can you put money in a gratuity fund? And whenever the slave finally leaves or retires, will you pay from that fund? Yes, but only if it's an approved gratuity fund or an LIC gratuity fund. Not, you can't put in the drawer and say, listen, I'll pay it, I'll take a deduction. No, it has to be an approved gratuity fund or an LIC gratuity fund. Next guys, continuing here. Guys, some businesses requires animals. If you use animals in your business, example research, example tourism, then will you get a deduction of the animals that you use? Yes, when they die, whatever amount you paid for them, you'll get a deduction. But after selling whatever skin, etc., if you sell and if you make more money on the net amount, you will get deduction. Very important guys. The surgeon did surgery for 7 people. He took it in the income. He took it in the income also because he was following accrual basis accounting, and now those 7 people are not paying him back. Can he take a deduction of bad debt? Yes. But what if he feels they will not pay? Can he make a provision for bad debt? No guys, provision for bad debt is not allowed. Actual bad debt is allowed. What is the difference? Provision means I feel he will not pay. Bad debt is I know he does not want to pay. Guys, that is the difference. If provision is allowed, then everyone who does not want to pay taxes, they will say I have a bad debt, I'll minus it. So provision is not allowed, only real bad debt is allowed. Yes. Here guys, I have a question. What if these 7 lakh, now after a few years they come back and they say, listen, I feel bad, I can't pay you 7 lakhs, but let me pay you at least 4 lakh. Is this bad debt recovery? Will you tax it? Yes. There's a section called section 41(4), which 41 section entirely we'll see ahead, but in 41(4) you tax it as income. Yes. But guys, here is a catch. What if you wanted a deduction of 7 lakh for bad debt, but the officer says, no, I don't think they are bad debts of 7 lakhs. So he allows you to minus only and only, let's say, he allows you to minus only 6 lakhs. How much did you want to minus? 7. How much the income tax officer wanting to minus? 6. So how much is already taxed guys? How much is already taxed? 1 lakh is already taxed. Now if the recovery happens of 4 lakhs, will you take the entire 4 lakhs into tax? No, you will take 4 lakh minus 1, that is you will only take 3 lakh into bad debt recovery. I repeat this once again. You put 7 lakhs in the income first. You wanted 7 lakh as a bad debt, but the officer allowed you only 6 lakh. That means did he tax you on 1 lakh already? Yes. So now if by chance you recover this from this 7/6, you recover some amount, you will only tax after reducing 1 lakh, because 1 lakh has already been taxed. Perfect. Guys, here, what if it's not a business bad debt? What if I have given some money to a friend and like a good friend, he never returns my money back? Can I minus that? No, you can't minus that, guys. Only business bad debts you can minus, because only business bad debts will actually be in your income, which you can minus. Next, guys, is 3619. This is only for Indian companies. Please keep it in mind. Only for Indian companies, not for individuals, not for HUFs, not for partnership firms. Guys, the surgeon's company, all the employees had 9 kids. So he got very worried and he said, I want to spend some money on family planning. So to teach people how to do family planning, he did a revenue expenditure. Was that allowed? Yes. And he incurred some capital expenditure. He made a movie on the benefits of small family. So will they get a deduction? Yes, but 1/5 every year over 5 consecutive years, starting from the year you incur the expenditure. This is family planning expenditure. This is only and only allowed. Guys, this is similar to scientific research. Is this connected to his business? No. But still, will you get it? Yes. Same like donation. When you donate for scientific research, it might not be connected, but still you will get yes. So family planning and scientific research have to be thought it together. Next, guys, very important, 36.1.15 and 36.1.16. In the year 2015 and 2016, the government introduced something called STT, Securities Transaction Tax, and CTT, Commodities Transaction Tax. What is this? Guys, this is like when you use the highway, do you pay a toll? Yes. Same way, when you use the stock market to buy and sell mutual funds, shares, etc., whether you make money or you don't make money, the government takes a small percentage, which they call transaction tax, securities and commodities. Will this be allowed as a deduction? Yes. Only in PGBP? Yes. In capital gain, you don't get it. Only if you take share trading or commodity trading as a business, only then this will be allowed as a deduction. That is section 36 wrapped up. Guys, the important ones I want to recollect once more. Guys, this and this is important. 9.1 is important, but remember only the exception. It is only available to Indian companies. 7.1 is absolutely important. 7, sorry, bad debt. 6 is not that important. 5, 4 and 4 is important. Guys, these three, who is paying this money, guys? In 4, 4A and 5, who is paying the money? The employer is paying the money. Now, guys, while the employer, that is the surgeon, was paying for the slaves into their NPS account, into their PF account, etc., can the slaves also tell him that, listen, when you pay my salary from my money also you contribute some? Yes. Guys, can the slaves tell the surgeon that, listen, when you pay my salary from my money you also contribute to the PF, to the NPS? Yes. So the surgeon, this time, this is not his money, this is the slave's money. So that he does not misuse it, we've done something like this in IFOS, so that he does not misuse it, whatever this amount is, let's say this amount is 10,000, it will be first added to his PGBP income. And only if he pays by the monthly due dates, not the yearly due date, guys. Let's say for the month of Jan, 15th Feb. For the month of Feb, 15 March, these are monthly due dates. Only if he pays by monthly due date will he be allowed to minus? Yes. I repeat. So guys, his own contribution, there is no monthly due date. His own contribution to PF, to National Pension Scheme, to Gratuity Fund, no problem. But if it's the slave's money, please tell me, does he have to be extra careful with it? Yes. And he has to pay by when? By the monthly due date. If he does not, then he will add, but there will be no reduction. There will be no reduction. So this is the concept. Perfect. And now over to the last section, and then we take a break, section 37. This is a general section, guys. What if there is any other expense incurred in relation to my business and profession? Example, guys, I need to buy I need to get my computers, or let's say I need any expenditure. I have an annual party for all my employees. Guys, is it a business expense? Am I keeping my employees happy? Yes. I need to take an offsite for all my employees. I need to take them for a one-day picnic so that they are motivated enough. All that expenditure, as long as it's connected to my business or profession, and as long as it's revenue in nature, then can I take it a deduction? Yes, under section 37, yes. But two things are specifically not allowed. One, if it is any illegal expenditure. Illegal expenditure means bribes, penalties, secret commission, etc. not allowed. And if it is any CSR expenditure, like I built from my of business money, I built a school for underprivileged children in my village, that is not allowed, unless the CSR is like family planning or like scientific research, which is there in one of the section. Otherwise CSR is not allowed. Why? Because who told you to do CSR? Companies Act and the Income Tax Act. Why should I give you a reduction? So that is not allowed. So that brings us to the end of deductions. Just recapping: 30, 31, main is 32, depreciation, very important, 35 important, 35 AD important, 35 Delhi Development Authority VRS, 35D direct doctor, divide the expenditure, 36 the host of deductions, and 37 the generic deductions. Deductions are done. We are 60% done with PGBP. When we come back in 5 minutes, we will continue. Guys, no problem, even if it takes some more time, we have enough time. This is only day 2 of our DT sessions. Okay, 10 minutes of break for everyone, no problem. We'll come back in 10 minutes and we will do as much as we can today. Thank you so much. I'll see you guys in 10 minutes. PGBP does take time because it's one of the biggest chapters of our syllabus. So let's get back. We've already looked at the expenses. Now it's time to look at the disallowances. Guys, what are disallowances? The government doesn't like these expenditures. So they say, listen, even if you incurred them, sorry, we will not be able to give you the deduction. So in the exam, if you see any of these and they've already been minused, you add them. Or if they've not been minused, then don't minus them. The first one is a surgeon wanted to be a politician. So he used to give ads in political souvenirs ads, in political newspapers and magazines. So section 37(2)(b) said that these ads, these expenditure on ads in political souvenirs, political magazines will be disallowed. Next, guys, the same poor wins cash income, if you remember, poor wins cash income is also here. So let's try and tackle those. Personal expenses are not allowed, which we already know. Now let's tackle this. 40A1 and 40A1A talks about expenditures which you've incurred without deducting TDS or without paying TDS. So 40A1, 100% will be disallowed because you've either paid outside India or you've paid to a resident or non-resident, and your 30% will be disallowed because you paid to a resident. So guys, you need to do two things. Very, very careful, guys. This is very important. Please watch out. You need to do two things. You need to first deduct the TDS. By when do you need to deduct it? You need to deduct it during the financial year or during the previous year. That means your deduction deadline is 31st March. Yes. And you need to pay this same amount by the return filing due date. So both the things you need to do. Yes, you need to deduct also and you need to pay also. Even if one of the things you don't do, you will not get a deduction. So example, if you forget deducting it this year, but on the 2nd of April you remember to deduct and you deduct it and you pay before the return filing due date, will you get a deduction in the year 21-22? No, because you did it after the year ended. So then permanent disallowance, the pizza will never be delivered to my house. It will be, there will be, but in the year of payment. So which is the year of payment? 22-23. In next year you will get the deduction. Next example, you deducted it all right, but you paid it, your return filing due date was 31st July, you paid it in October, so you paid it late. So will you get a deduction in the year 21-22? No, you will not. But then I have actually paid it in October, so no problem. In the year of payment, that is 22-23, you will get a deduction. So whatever was disallowed will be allowed. If 100% was disallowed, 100 will be allowed. If 30 was disallowed, 30 will be allowed ahead. That is the concept here. Perfect. Guys, this is, I'm just reading out this section from here. Disallowances, I'm just reading first the ones that we already know. 40A1, 100% will be disallowed, and 40A1A, 30% will be disallowed. Remember the same concepts of IFOS. If the recipient takes this income, includes it in his return, files his return and pays the taxes, the government has got the tax. Now why are they worried? So they will give you a reduction in the year the return is filed. So this is very similar. Yes, this we've already done. Yes. So poor, we've reached here. Now in IFOS you are paying excessive or unreasonable to related persons. Excessive means you had to pay 100, you paid 110, so that 10 will be disallowed. And unreasonable means you did not have to pay only, but you're still paying, so the entire amount will be disallowed. That was an IFOS. Here also it's very similar, but the section changes to section capital 40A2. Excessive or unreasonable payment to specified persons. Now what are specified persons? They don't call it related persons here, they call it specified persons. Who are specified persons? Let's see. The concept is the same, only thing is specified persons. Who are specified persons? If you are an individual, then your relatives plus anyone whom you hold substantial interest in, or anyone which holds substantial interest in you. If you are an HUF, then the members and anyone in which you hold substantial interest, or anyone who holds substantial interest in you. If you are a partnership firm, then the partners plus their relatives plus anyone that holds substantial interest in you, or anyone whom you hold substantial interest in. If you are a company, then directors plus their relatives plus substantial interest. So this is the concept of specified persons. Yes. If you pay excessive to them, the extra amount will be disallowed. If you pay unreasonable to them, the entire amount will be disallowed. This is section 40A2. So this is similar to poor wins cash income. Wins will not be here because in PGBP you don't have any winnings from lottery. Cash, very very important guys. The current government does not like cash, at least with you and me. So section 40A3 says that if you pay cash greater than 10,000, exact 10,000 is not a problem, greater than 10,000 per person per day, it will be disallowed. But guys, what about a goods transport agency or goods transport agent? In that case, if he pays more than 35,000 per person per day, then it will be disallowed. So this is 35,000 paid by the GTA. So they have a slightly higher limit. Yes. Now, but there are sometimes you cannot avoid paying cash. So hence they introduced a section called Rule 6DD, deduct. Even if you pay cash, will it be allowed to deduct? Yes, that is Rule 6DD, deduct. Now what is this rule? Let's understand what is this rule, deduct. So this rule says that there are certain payments. Here there is one big change, please watch out. If you are paying to an agriculturist or a farmer or someone who does fisheries, someone who does animal husbandry, etc. in cash, it's perfectly okay. But not to a middleman, to the actual farmer, to the actual fisherman, etc. If you pay to cottage industries which are very small, how do you define what is small? They don't even use power, then in that case it is allowed. If you are paying to your slave up to 50,000 retirement benefits on retirement in cash, no problem. If you are paying to your slave salary because he's been out of office for more than 15 days and he's in a place where he does not have banking facility, and if you deduct TDS on that salary, you will be allowed on this salary paid in cash. Yes. If you pay in a village to someone which does not have banking facilities, in India there are some small villages which don't have banking facilities. But guys, what has been removed is if you pay on a bank holiday or if you pay on a bank strike day, that one has been removed because people were so smart. This was a law earlier, but people would deliberately pay cash on holidays and say this is allowed. So then this was removed. So on holiday or strike, this is removed. So this is 40A3. 10,000 per person per day is not allowed. Cash is not allowed. Here we go. And last is income tax. You know guys, income tax is paid because you earn income. So hence that is not a business expenditure. That will not be allowed. I just wanted to ask you, income tax paid 10,000 rupees, is that an expenditure? Can I deduct 10,000 rupees? No. So you get a refund of income tax 5,000. Is that an income? No. When you pay, if it's not an expense, refund is also not income. But on the refund you earn interest. Is that an income under IFOS? Yes, that is an income under IFOS. So remember, refund of income tax, that could be a good question. Refund of income tax, no impact, because that is not an income. If they've taken it as income, remove it. But interest on refund, yes, that is IFOS. All right, so here we go. Just reading those particular 40A1 we've done, 40A1A, 40A2 income tax paid. 2B is not that important. 40A3 is slightly important, so not important, but it's there. So I'll tell you what is 40A3. When you are paying outside India salary or to a non-resident salary, this is the poor. There are two O's, so I'm taking about the second O. If you are paying outside India or to a non-resident salary and still you don't deduct TDS, then it's a permanent disallowance. Why? Because he's your employee. You should know that you need to deduct TDS. So in that case, it is a permanent 100% disallowance. 40A4 is not important at your level, and we'll see it ahead in salaries because it's a perquisite given. Okay, so these were basic disallowances which were also seen in IFOS. Now some new ones on the screen, please. Guys, sometimes if I have to pay electricity bill, guys, okay, I'll keep it very simple. If I have to pay a rent of 50,000, can I take a deduction of this rent on 50,000 even if I have not paid it because I follow accrual system of accounting? Yes, I can take a deduction even if I have not paid. Yes. Same for electricity, same for salary. Yes, because we all follow accrual system of accounting. Even if you've not paid, you can take a deduction. But because some people are misusing that, they put a big tree in the middle. This section is called section 43B. This tree in the middle, this is the shortcut TREEEEII. They said on this tree, if you see what is written, it said please pay. Only if you pay these amounts will you get a deduction. Yes. So when should you pay? Tomorrow, day after tomorrow? No, by the return filing due date you need to pay. But guys, generally, can I take deduction of rent without paying? Yes. Salary without paying? Yes. Interest without paying? Yes. But if it's any of these three expenditures, then will there be only on payment basis? Yes, the deduction will be only on payment basis. Who tells you that? Section 43P. What is this tree? One is taxes to the government. So guys, do you have to pay the tax to get a deduction? Yes. In IFHP also we had seen something similar. Municipal tax, guys, only on payment basis, but that you have to pay during the year. This you can pay till the return filing due date. Next, railway assets. What are railway assets? Guys, when you transport goods from one place to the other using railway, you use the railways assets. For that you need to pay. Only if you pay within return filing due date. Guys, all these I'm not going to repeat, only on payment basis. Next, 3 employees, leave salary or leave encashment, bonus and commission, and their retirement benefits to the employees. What are these E? Employees, 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 or slaves, slaves, slaves. They are leave salary. That means if they don't take leaves, can you convert them into money and pay to them? Yes, but deduction will be only if you pay. Same thing for bonus and commission, same thing for retirement benefits. So imagine when you're paying to their PF, to their national pension scheme, gratuity fund, will you get a deduction? Yes, but only on payment basis. And last 3 I's are interest, interest, and interest, but only to the following people: banks, financial institutions, NBFCs, and state and public financial institutions. State and public financial institutions, only these. Yes, if you have to pay interest to a money lender, that is not covered here, so that you can take a deduction even without paying. But if you are paying to a bank or to an NBFC or to a financial institution which is state or public financial institution, then you will get a deduction only if you pay. This is the section. I hope it's clear. All right. So now I'm giving you some questions. You tell me, will it be allowed? Guys, I have to pay some salary to my staff. Can I take a deduction without payment? Yes. I have to pay my rent to my landlord. Can I take a deduction without payment? Yes. But I have to pay some municipal taxes for my office. Can I take a deduction without payment? No. I have to pay a bank interest. Can I take a deduction without payment? No. And by when do I need to pay? By return filing due date. Guys, what if I'm late? Then don't worry. As long as you've paid, you will get it in the year of payment. If you are late, it's a temporary disallowance. Yes, it's a temporary disallowance. If you don't pay it this year till return filing due date, you will get it in the year you pay. So what if my return filing due date is 31st July and I paid 1 day late from 1st August? Sorry, this year you will not get it, but next year you will get the deduction. So they will delay it. Yes, they will delay it. Guys, here you have to pay by the return filing due date. Converting interest into a loan is not payment. Giving a guarantee is not payment. Payment means actual payment. Guys, what if electricity expense? Can I take a deduction for that without payment? Yes. All of it, every expenditure, guys. I'm not changing your method of accounting. It's still accrual, only except tree. What is written on the tree? Please pay. That is section 43B. Now guys, we are very close to the next section. Guys, a partnership firm. A partnership firm, let's say Syringe and Company. Can it pay profits to the partners? Share of profits? Yes, that is exempt under 10(2)(a). Can it pay salary to the partners and can it pay interest to the partners? Yes. And that is taxable under PGBP. You know, for the partners, it is taxable under PGBP. But guys, both salary and interest have a limitation on the deduction. You can pay as much as you want, but there is a limitation on how much you can deduct. And how much ever is allowed as a deduction, only that much is taxed as income. Only that much is taxed as income. So first, let's check interest. What is the limitation on interest to be paid by a partnership firm? A partnership firm, interest they can pay maximum 12%. Excellent. And this only if it's authorized by the partnership deed. The authorization cannot be retrospective. That means if the authorization is from today, you can only pay interest from today. The interest can be paid to working as well as non-working partner, because it's not on when you work, it's when you pay money to the partnership firm, and it can only be paid up to the profits. So if the profits is 1,10,000, I can't pay interest of 1,20,000, I can only pay interest of 1,10,000. This is interest, and once you calculate the interest, you will see how much salary will be allowed as a deduction. Guys, this is the maximum. Yes. Can I pay 8%? Yes. Can I pay 13%? No. This is the maximum. Just 1 second. Perfect. Now guys, for salary also there is a limitation. There is no limitation on paying, guys. You can pay all the money you want, but deduction there is a limitation. What is the limitation? First you find out the book profit. What is book profit? Book profit means all the deductions including this interest. Yes, including this interest. This is section 40B4. And book profit, if the profit is there, if there is a loss then we'll see, but if there is a profit, you split the profit up to 3 lakhs and more than 3 lakhs. Up to 3 lakhs, you can pay either 1.5 lakhs or 60%, whichever is more. And above 3 lakhs, you can pay up to 3 lakhs, 1,50,000 or 90%. And above 3 lakhs, you can pay 60%. Example, what if your profit is 5 lakhs? Then you will split it up 3 lakhs and 2 lakhs. On 3 lakhs, either 1.5 lakh or 60 or 90% of this is 2,70,000. Here it is, guys. And so 2,70,000 is higher one, and on 2 lakhs 60%, that is 1,20,000. So 1.2 lakhs and 2.7 lakhs, that is 3.9 lakhs. Perfect. So this is the concept of section 40B4, limitation on interest. Can I pay more? Yes, but the deduction will be only of this much amount. and whatever is deducted for the partnership firm, same amount will be taxable for the partner in PGBP. Remember that rule, guys. And whatever is given as salary, same amount will be, whatever is allowed as deduction, same amount will be partner salary. Guys, what if there is no profit? What if it's a loss? If it's a loss, then it's only 1,50,000 maximum. Yes, guys, this is for all the partners for the whole year. Very low amount. Yes, this is because the firm has made a loss. Perfect. Guys, here we go. 40B5 is for salary, 40B4 was for interest. Now 40A2, excessive or unreasonable payments to specified persons, we've done. 40A3 and 3A. We've already done 3, that is cash payments. Guys, I just want to add one more thing there. You know, guys, cash payment more than 10,000 per person per day is not allowed. But what if I did not pay today? What if I repaired my laptop and I had to pay 25,000 but I did not pay today? So is it my liability? Yes. And can I discharge my liability in cash? No, that is also not allowed, but that is section 48(3)(a). Concept is still the same. So you cannot pay cash directly, neither can you discharge a liability in cash. Next, guys. Guys, can the surgeon, can he contribute to the employee's gratuity fund? Can he contribute to the gratuity fund? Yes, but it has to be approved gratuity fund or an LIC gratuity fund. So I'm giving you an example. Please tell me, will the surgeon get a deduction? He took some money, 50,000 rupees, and he put it in the drawer in his office and he called the drawer gratuity fund for employees. Will he get a deduction for that? No. But when the employee was actually leaving the organization, he took money from the drawer and he paid it to the employee. After that, on payment, will he get the deduction? Yes. So there are only 3 times when you get a deduction for gratuity. Once when you pay it in the gratuity fund, or if you pay in the LIC fund, or when you actually pay. Now I'm giving you another example, guys. What if you put money in the approved gratuity fund? Will he get a deduction of 50,000? Yes. And when that money is again paid to the employee, again will he get a deduction? No, he will not again get a deduction, only once. So remember, either on a payment to approved gratuity fund, or on payment to LIC gratuity fund, or on actual payment from the drawer. Only in these 3 cases he will get a deduction. This is 40A7. The section is not important, the concept is important. And guys, last, what if he wants to throw an annual party for the employees? Guys, can you throw an annual party for your employees? Yes. Can you spend 10 lakh rupees on that party? Yes. No one will question it. No, as long as it's for a business purpose. But guys, can I make a provision for annual party of employees? No. Can I make a provision for offsite for employees? No. So any employee benefits, as long as you pay for it, no problem, but you can't make a provision. Guys, I'll give you a pro tip. Any provision is not allowed in PGBP or in income tax only. No provision. Provisions are all for accounts, no provisions for income tax. Why? Because Indians are very smart. Otherwise, whenever you have a high profit, you will make a provision and you will pay tax on very low profits. Perfect. Now guys, a couple of other sections. 43 CA. Guys, you're a builder. This is a builder or a construction company, and you're selling a stamp duty value 1 crore house for only 75 lakhs. This is something that we had done yesterday, but we had done from the receiver's perspective. Today we are doing it from the giver's perspective. If you're a builder and you're giving a 1 crore house for 75 lakhs, the government says we don't trust you. So they will take the sale consideration and they'll multiply with 110%, which is basically 75 lakhs into 110%. 75 lakhs is an example, which is 82.5 lakhs. If your stamp duty value is within that range, no problem. But if your stamp duty value is higher, then we know what you've done is you've not given a discount, but you've taken black money. So in your sales, you will not put 75 lakhs. No, you will not. Your sale consideration will now be the stamp duty value, which will now be 1 crore. So in gift taxation, yesterday, did we tax the receiver for the black money? Yes, under section 56(2)(10). Same thing now we are doing for the builder. Same section, same concept, but different section. The section is 43 CA, and that's the reason now, guys, whenever a construction company or a builder is trying to sell a flat, they will first call up their CA that, listen, I'm trying to sell something. Please tell me what should be the sale price maximum so that I don't be subject to this. Guys, what if the sale price, the CA says, make the sale price 96 lakhs. So 96 lakhs into 110%. Is that okay? Yes, that is perfectly okay. So whenever you're selling as a builder, will you contact your CA? Yes, so 43 CA. So it's the same concept, but the opposite from yesterday's gift taxation. It's the opposite impact in the hands of the builder. This is 43 CA. Guys, then there is some deemed incomes. Section 41, I told you income section is section 28 till now. But these were direct incomes, like when the doctor gets his fees, when I get my salary, when I get my professional fees. But there is a deemed income section, section 41. Watch out for it. It's a very interesting section. The first part says 41(1). If there is any liability which you don't now have to pay, example, you had to pay someone 25,000 for laptop repair, but that person is no more. So will you have to pay him for 25,000? No. So that is indirectly your saving. So that's your income. 41(1). 41(2), two words, balancing charge. If you have any asset which is on SLM basis and if you sell it at a higher price, then it's a balancing charge. 41(3), three words, scientific research asset. If you have a scientific research asset, you'll get a 100% deduction. So what is the value of the asset, guys? A big zero. So if you sell the asset before bringing it into business, will you reverse it? Yes, reversal will be here, 41(3). And last 41(4), four letters, DEBT. Whenever there is any bad debt recovery, guys, debt or bad debt recovery, will it be income? Yes, 41(4). So I recap, section 41 is called deemed income. Yes. Guys, this is similar to yesterday. We did not discuss IFOS, but I'll discuss it now. Section 59. In section 59, we did not discuss this yesterday, but same thing here. In IFOS also, if there's a liability which you don't have to pay, it is deemed income. Same thing here also. 41(1), liability which you don't have to pay. 41(2), two words, balancing charge. 41(3), three words, scientific research asset when you're selling. And 41(4) is four letters, DEBT. These are the deemed incomes. Now, guys, composite income we've already done. Rule 8, 7B. 8 is for tea, 7B is for barista, 7A is for rubber, etc. Now we'll do 44AA. Guys, have you ever heard any friend of yours who's in a job that I need to maintain my books of accounts? No. So this generally is said by businessmen. Businessmen spend half a day on one of the days of the week to do their accounting, because as per the government, they need to maintain their books of accounts. So this is section 44AA. The shortcut is arrange accounts. Guys, AA, the shortcut is arrange accounts. Who needs to arrange accounts? Let's check. And what are these accounts you need to arrange? Let's check that as well. First, professionals. Professionals are who are professionals, guys. Professionals under this section and the next section are all those people your parents told you to become: doctors, engineers, architects, CAs, lawyers, anyone with a degree. Does the government care about all of them? Yes, the government cares about all of them. Why am I saying this? I'll tell you why. Because the government says if in the last 3 preceding years, not this year 21-22, but the last 3 preceding years, if in the last 3 preceding years, in all the 3 preceding years, if your income has been greater than 1,50,000, here guys, if your income in all the 3 previous years has been greater than 1,50,000, then you need to maintain books of accounts. Yes. So in all the 3 previous years, yes. So last year it was 2.5 lakhs, last to last year it was 2 lakhs, and last to last year it was 1,50,000. So not in all the 3 previous years, it's more. So you don't have to maintain books of accounts this year. So every time you want to check, go to the last 3 previous years and ask yourself if in all the 3 previous years your income is more than 1,50,000. And for businessmen, that means other than professionals, the government doesn't like all of them, so it's any. Yes. Same in the preceding 3 years. in any of the years, if your income is greater than 1,20,000 or if your sales is greater than 10 lakhs, in any of these 3 years, yes, in any of these 3 years, if your total income of your net income is greater than 1,20,000 or your sales is greater than 10 lakhs, guys, this is very easy to achieve for a businessman. Even one of them is achieved, income or sales, you have to maintain books of accounts. So in the last 3 years, that is 1920, 2021 and 1819, if your income has been 1 lakh, 1 lakh, 1 lakh, sales has been 9 lakh, 9 lakh, 11 lakh, everything is okay except 1 year, it is more than 10. So will you have to maintain your books of accounts in this year? Yes. So in any of the 3 previous years, this is any and this is all. Now guys, because this limit is so small, the government said that if you are an individual or a HUF, if you are an individual or an HUF, then the limits are slightly different. If your total income is greater than 2.5 lakh or if your gross receipts or sales are greater than 25 lakhs. So do we have a slightly higher limit, individuals, HUFs? Yes. And if you have to maintain books of accounts, for how many years will you maintain it? For 6 years you need to maintain your books of accounts, and the books of accounts are given in rule 6F. Don't have to remember it, but lots of books of accounts like your income and expenditure account, P&L, balance sheet, cash flow, etc., etc. This is your section 44AA, arrange accounts. Perfect. Here we go. Now guys, you've arranged your accounts. Guys, if you are a small businessman, the government is not very bothered with you. But if you're a big businessman, then the government wants to check if you've taken all your incomes well. The government wants to check if you've minused only those expenses that you should have minused. So how will the government check each of y'all? They can't. So they tell you that, listen, you go to a CA and get your tax audit done or get your audit done. This is section 44AB, audit your books. That's the shortcut. Guys, is audit expensive? Yes, you have to go to a CA. Not only is it expensive, it also takes more time. So you need to go to a CA, you need to ask him to audit your books. He will take some more time and he will charge you some money. So this is audit your books. When do you need to audit the books? Here we go. First is professionals. In case of professionals, if your turnover is more than 50 lakhs, then you need to audit. Yes. In this current year, yes. So only after the year ends will you know whether you will be subject to audit or not. And if you're into business, that means others other than professions, then only if your turnover is more than 1 crore, then you need to get an audit. Yes. But here the government has increased the limit, not for everyone, but it's like an added feature. Yes, it is 10 crores if 2 conditions are satisfied. Your cash receipts divide by total receipts and your cash payments divide by total payments. So whatever you pay, the cash is up to 5%, and whatever you receive, the cash is up to 5%. So in both these cases, only if it's up to 5%. Alright, so this is 44AB, audit the books. Guys, again just recapping it, auditing, is it compulsory? No. Only if you're big, professionals more than 50 lakhs and others more than 1 crore. But if there's a new limit of 10 crores, but for that your cash receipts throughout the year, whatever you receive in cash, divide by total receipts, have to be up to 5%. Exact 5 is also okay, yes, but it cannot be more than that. And your cash payments up to total payments during the year has to be more than 5%. Above that, not. Above that, then you'll have to go and get your audit done. This is not good news for CAs because we lose a lot of clients, especially those who do online transactions. We lose them because their turnover becomes 10 crores. Alright, this is audit the books. Audit is compulsory when 50 lakhs, 1 crore, 10 crore, and for 10 crore this is the 2 limits. Due date for audit we will see in the chapter called return of income. And in case you don't get your audit, if you have to get your audit done and you don't, there's a penalty, but that penalty I've just written it here. Penalties are at CA final. Now guys, all this is a very big headache. First you have to calculate your incomes, then you have to see which expenses allowed, where you paid cash, where you have not paid cash. So businessmen went to the government and they say, listen, can we not assume our deductions? Can we not just assume our incomes and assume our deductions? So the government says, yes, you can under 44 AD assume deductions. So the government says this one, you take your income, congratulations, and you just multiply them with 8%. So you will get your profit, yes, and on that profit you will have to pay tax. Yes, can I show more than 8? Of course you can show more than 8. More than 8 means more profit, means more tax. So why should we complain? And in fact, if you get money in your bank account, then this rate will be only 6% of that income which comes in your bank account. So yes, your incomes have to be split. Those which you get other than your bank account, and those which you get in your bank account. In your bank account, it is only 6% which will be profit. On this, you'll have to pay tax depending on whatever is your tax rate. Wow, so Reliance Industries can take this? No, it is only available to individuals, HUFs and partnership firms, not even LLPs. And that too, all of these guys should be residents, so this benefit is not available to non-residents. Alright, and it is only available if your turnover during the year is up to 2 crores. Yes, only if your turnover. So that means, guys, is it for smaller people? Yes. Smaller turnover? Yes. And only for residents? Yes. Can I show higher profits? No problem, guys. Think like the government. Higher profits is no problem. And here, can I take any more deductions after this? No, all deductions have already been taken. Can I take any depreciation, anything? Nothing, guys. Everything from section 30 to section 43 has already been considered. But at least can I set off the losses? Yes, losses are not in this section anyway, so you can set off the losses. There is no problem with that because that is ahead in section 70. Alright. Now, guys, this is such a great thing. Yes, this is an amazing thing. A lot of my clients, including me, I fall under this, so I use this. So this is something that can be used by many people, and it's a great scheme up to 2 crores. And if you're an individual HUF partnership firm, guys, the moment I have a company, then I will not be able to take this up. But guys, there is a problem here. The problem is there is a chain. There is a drug reaction. What is a drug? If you consume a drug once, you can't stop. Same way, if you consume this in this year 21-22, if this is the year you start taking this, then for the next 5 years, you need to every year take this. That means in the next 5 years, every year the government is at least expecting 8% and 6% to be your profit. If even in one of these next 5 years you don't take it and you break the chain, then what will happen? There is a section called section 44 AD subsection 4 which says that if you break the chain, then in that year you will have to arrange your accounts and get them audited because we want to check what happened. In the next 5 years you cannot take this section, and hence in the next 5 years you will have to arrange your accounts and get them audited. So these are the 3 repercussions of breaking the chain. What are the 3 repercussions? That year, the year you break your chain, they want to know why your profits low, so get your books of accounts maintained and get them audited. The year next, after that, all the 5 years you cannot take 44 AD, so you have to maintain your books of accounts and get them audited for the next 5 years. Yes. So this is a chain reaction in 44 A and D. But guys, this is only for P&L. In your balance sheet, will you calculate depreciation normally? Yes, depreciation will be normally calculated. And in these 5 years, if my turnover becomes more than 2 crore and I cannot take the scheme, then it's not your fault. Only if you can take the scheme and you don't take it, only then it is your fault and you break the chain. But this is only for businessmen. Yes guys, I forgot to mention, this is only for business. That is not for professions. So professions, what is the section? There is section 44A, DA, assume deductions again. This is for professions. For professions, they say take your income and multiply it with 50%. That will be your profit. Why 50% for professions? Because they know in professions you make a lot of money. Can I show higher? Obviously you can show higher. Can I show low? No. This is again only for small ones. That means your turnover should be maximum 50 lakhs. It's same individual, HUF, partnership firms, not even LLP, and that too only for residents. And there is thankfully no chain here. But can you take any deduction? No, deductions have already been taken. All of them? Yes, all of them. So is this simple? Is there no chain? Yes, because 50% you're offering to tax, so there is no chain in this case. All right. Alright, now the last presumptive section, 44AE, always on the expressway. Guys, if you're always on the expressway, who are you? You're a goods transport agent. That means a goods carriage. You are basically a trucking company, etc. And because you're always on the expressway, the government says, listen, you don't maintain your books of accounts, I'll also give you presumptive income. Yes, what is a presumptive income? They say if you have a light motor vehicle or goods vehicle or a medium goods vehicle, then we will assume that you are earning 7,500 per month from that truck, per truck or per vehicle. And if you have a heavy goods vehicle, then we will assume you are earning 1,000 per ton per month per vehicle. So what is heavy goods vehicle? Heavy goods vehicle is something which is more than 12 tons. So exactly 12 tons? No, more than 12 tons is heavy. The exam will either tell you 12 tons, then it's light or medium. If it's more than 12 tons, then it's heavy. Again guys, they are expecting you to at least earn this much. Yes. Can you show higher? Obviously you can show higher, but can you show lower? No, you cannot show lower. Guys, I'll tell you how you can show lower, but here right now in all these sections, can you show lower? No. Now this is applicable to all, yes, residents also, non-residents also, to individuals, companies, partnership firms, everyone. Yes, everyone is invited to this party, but you should have maximum owned in the year, not put to use. The concept is owned. Put to use is only for depreciation. They will give you put to use to confuse you, but only focus on ownership. You should own maximum 10 goods carriages during the year. What if you own 11 also for one day? Then also it is not allowed. You should maximum own 10 goods carriages during the year. That is section 44AE. But guys, in any of these sections, 44AD, 44ADA, 44AE, what if I want to show lower profits? Can I have a loss? Can I have, because of petrol prices going up, can I have a loss? Yes. But in that cases, the government wants to know why you had a loss. So you have to maintain your books of accounts and get them audited. That is the section 44AA, 44AB. This is the concept of presumptive income. Alright guys, this is the quick book here. It ends here, but we are not ending till we finish using the module to do the sums. 1 minute. Let me just convert the module. 1 minute. Just uploading that file. Perfect. Here it is. I straight away going to the PGBP questions. Alright, this is question number 1. Let's do this, guys. Everyone needs to pay attention to these questions. Mr. Venus engaged in the manufacture of pesticides. Guys, is it manufacture? Will you get additional depreciation also? Yes. Furnishes the following particulars relating to his manufacturing unit at Chennai for the year ended 31st March 2022. WDV, guys, this is the financial year 21-22. This is the opening WDV, 30 lakhs. Depreciation including additional depreciation last year was 4.7 lakhs. New machinery purchase this year, computer purchase this year. All assets were paid by account pay check. This is perfectly okay. All assets were put to use immediately. This is perfectly okay. New machinery purchase and computer have been installed in the office. So this is office appliance. On this you will not get any additional depreciation. And during the year last year, guys, a new machine had been purchased on 31st October for 10 lakhs. Additional depreciation has been claimed, but because last year you installed it only in October 31st, you would have got last year half. This year you still have to take 10% additional depreciation. And depreciation rate for machinery may be taken as 15%. Let's do this sum, guys. Everyone, please tell me what was the WDV? 30 lakhs. 30 lakhs was the WDV. So I'm just writing opening WDV 30 lakhs. Sorry, last year's closing is this year's opening 30. Next, depreciation including additional depreciation of last year. I'm assuming, guys, this has already been minus. You can assume this is not minus and you can minus it, but I'm assuming this has already been minus. New machinery purchase, guys, do you follow WDV method? Yes. Do we follow block of assets family method? Yes. So any purchase, what do you need to do? You just need to add it. I'm adding this 10 lakh rupees. And when was it put to use? 1st of September, full year, half year. This you will get full year. Next, I am also adding 8 lakh rupees, but this is put to use on 1st December. So this is basically only half year. And one more thing you will add, but this is a different block. So I'm just going to take a different block here. This is a block of machinery. And this is the block of computers. The computers you bought. I'm just going to add computers that you buy, and this is again for half year because it's bought and put to use on 3rd of January. That is 4 lakh rupees. Let's total it up. 30, 40, and this is 48 lakhs. And this is 4 lakhs. Always first do depreciation and then we'll do additional depreciation. So first depreciation on this 48, can I do 15%? No, because this is half year. So on 40 lakhs, I can do full years, and on 8 lakhs, I can only do half year's depreciation. So let's calculate, guys. On 40 lakh into full year, 15%, that is 6 lakhs. And on 8 lakh into 7.5%, that is 60,000. So this is 6 lakh and this is 60,000, that is depreciation. And on computer, what is the rate, guys? 40%, but this is again half year. So 4 lakh into 20%, that is 80,000. This is the depreciation, guys. Are we okay with the depreciation? We've only calculated depreciation till now. Now let's calculate additional depreciation. Last year, how much additional depreciation, guys? Last year on 10 lakh rupees, you would have got 10%. So on 10 lakhs, will you get this time 10%? Yes. So 1 lakh is additional depreciation. So I'm writing additional depreciation 1 lakh. Now this year, on the new purchase, 1, 2, 3 new purchases, let's see. New machinery purchase on 1st December and computer are put in office. So for these, you will not get any additional depreciation. So only on this 10 lakh machine, full year, will you get additional depreciation? Yes. So 10 lakh, 20%. So that is 2 lakhs additional depreciation. So how much is the additional depreciation? 3 lakhs. Total depreciation, 6 lakh plus 60 plus 80, total additional depreciation 3 lakh. This, my assumption is, guys, that this 30 lakh is already minus 4.7 lakh. But the way module has done it, they have minus 4.7 lakh from the 30 lakh and then they've calculated the depreciation. It's only an assumption away. It's the same answer. Alright, only because of the assumption, the amount becomes smaller. Perfect. Guys, that's the first question. Let's look at the second question, again on depreciation. Let's do this. Just 1 second. Perfect. Moving to this question, guys. Mr. Abhinamanu is engaged in the business of generation and distribution of electric power. Will he get additional depreciation? Yes. He opts to claim WDV. Guys, he can take SLM, but he's opted for WDV. Following are the details. Compute depreciation. Guys, WDV of block last year was 550. Depreciation last year was 7.5. We'll change the assumption this time, guys. 50 minus 7.5. We'll start with 42,50,000. New machinery purchased for 12th of October. Machinery imported from Colombo. New computer installed. All assets were account paycheck. Guys, new machinery purchased on 12th October. So this is half year's depreciation. So 10 lakh. I'm just writing half year. Next, machinery imported from Colombo on the 12th of April 2021. The machine had been used in Colombo earlier, and the assessee is the first user. This is second hand machine. I will add it, but I will not get additional depreciation anyways. This is full year. And this is a computer, so I'm going to take another block. This is 2 lakhs. And when was this computer bought? 15 July, so that is full year. Guys, let's first calculate depreciation. So this is 52.5 plus 9 lakh, which is 61,50,000. On 61,50,000, can I do 15%? No, this is half year. So 51,50,000 full year. And on 10 lakhs, half year. So let's calculate the depreciation. On 51,50,000 into 15%, that is 7,72,500. Final, yes. On 10 lakhs, 75,000 because 7.5%. Final, yes. And on computer, 2 lakh into 40%, which is 80,000. Final, yes. So this is depreciation, yes. Now let's calculate additional depreciation, guys. On opening, you will not get any. On new machinery, you will get. On imported, you will not get because second hand in India, and second hand abroad is also second hand in India. And computer, but computer is installed in the generation wing, so will you get? Yes, guys. So on 10 lakhs, you will get, but half year. And on this, you will get full year. So very carefully, on 10 lakh machine, 20%, so additional depreciation on 10 lakh machine you will get half year, so only 10%, that is 1 lakh. And on the computer, will you get 20%? Yes, so 20% of 2 lakh full year is 40,000. So this is additional depreciation. If you total up this plus this plus this, that is depreciation, and this plus this is additional depreciation. So 7,72,500 you minus, so this is the depreciation that we will get. Guys, the presentation, why is it not important? Because in the exam never has been a depreciation question asked. This they test you indirectly in the main first question. But if the answer is right, let's check the answer. Additional depreciation is 1,40,000, 1 lakh here, 40,000 here, so 1,40,000 is additional depreciation, and the depreciation is 772,75,80. 772, 75 and 80. See, our answers, if are correct, we will get the right answer in the exam as well, because it's not asked directly, depreciation is asked indirectly. Examine with reasons the allowability of the following expenses incurred by Mr. Manav, who is a wholesale dealer in commodities. Guys, please read the first one and please tell me, will you get a deduction for this? CSR activities, sorry, no deduction. Next. Will you get deduction? Yes, 100% deduction under 35 AD. Next, please read this one. You've not deducted TDS on 50,000 and it's paid to a resident, so 30% will be disallowed, that is 15,000 will be disallowed under 40A1A. And last, commodities transaction tax, is it allowed as a deduction? Yes, under section 36(1)(16), because you're a commodities dealer, that means it's your PGBP. Looking at the fourth question, guys, everyone, examine the reasons whether the following statements are true or false. First one, please read and tell me, very simple. For a dealer in shares, is STT a deduction? Yes, it is a deduction. Next. Guys, you have a liability of 25 and that liability has been discharged by a cross check. Guys, remember, cash is not allowed, cost check also is not allowed, and bearer check is also not allowed. So this will be disallowed. Yes. And is it mandatory to provide for depreciation? Yes, absolutely mandatory to provide for depreciation. Perfect. Guys, going to the fifth question. Examine with reasons the allowability of the following expenses under the Income Tax Act while computing income from PGBP. Guys, whether the following will be allowed as expenses. Read the first one, provision. Guys, the moment I read provision, do I have to read ahead? No. Guys, they are confusing you. Provision made on actuarial valuation for payment of gratuity. Whatever the valuation, provision is not allowed. Next, read the next one and tell me, is it allowed? $50,000 in cash to a farmer on a banking day, doesn't matter guys, as long as paid to a farmer it is allowed. Guys, remember rule 6 DD, to a farmer it's allowed whenever, no problem. Next, tax on monetary purchases. We've not done purchases in salaries, so I'll just tell you in an indirect way, guys. Is income tax allowed as your deduction? No. So is income tax you pay for your employees, will that be allowed? No. So this one will not be allowed. Next, payment of 50,000 by using credit card for fire insurance, allowed. Salary payment of 4 lakh to Mr. X outside India by a company without deducting TDS. Guys, sorry, this is a big crime. Permanent disallowance, you will not get this one. And payment made in cash 30,000 to a transporter for a day for carriage of goods. Guys, payment in cash made to a transporter will be disallowed. By made by a transporter is okay. I'm just checking that last answer for clarity. Here we go. Okay, so there is a confusion guys, because in ICAI they have said here that if you pay to a transporter also, paid in cash 30,000, even if you pay to a transporter up to 35,000 it's allowed, but in the exam they've taken a contrary view. So let's read this question and the answer. You paid 30,000. The limit for attracting disallowance under section 48(3) for payment otherwise than by account pay check or account pay bank draft or using ECS through a bank account is 35,000 in case payment is made for plying, hiring or leasing goods carriages. Okay, so they are saying, but in the exam one of the questions they disallowed this, so you know it's contrary views, but still what you will think is whenever you spend in cash and you are paying to a goods carriage person, it's okay up to 35,000 per person per day. Alright, looking at the sixth question now guys, over to us. Examine whether the following statements are true or false. The first one please. Business expenditure of 25,000 through a cross check is hit by previous. Yes, it is, because you cannot pay more than 10,000 per person per day. Next, is it a condition to write off in the books of accounts the amount due from debtor to claim deduction for bad debt? Yes guys, you can only claim bad debt if it's a real bad debt, so you have to write it off, only then can you claim it. Failure to deduct TDS to a non-resident will result in disallowance while computing the business income. Yes. If you don't deduct TDS, it will be disallowed while computing your income. Yes. All right. Very, very good question, guys. I want all your support here. Mr. Shivam is a retail trader of Cochin. Gives the following trading and P&L account. Guys, here he is given some additional information also, and you are required to compute PGBP. Only PGBP. So guys, whatever you get which is not PGBP, let's remove it. So what will you start off with? You will first start off with the final number, that is 50,000. This is what we will start off with. So I'm writing 50,000 here. Everyone attention on the screen. Sales, is it okay? Yes. Closing stock, is it okay? Yes. Gross profit, is it okay? Yes. Income from Unit Trust of India. Guys, should this be in PGBP? No. So you have already added it. I will minus it. And because they've asked only PGBP, if they had also asked IFOS or total income, I would take it to IFOS 2400. I want more answers, guys. Opening stock is okay, purchase is okay, gross profit is okay, salary is okay, rent is okay, interest is okay, depreciation is okay, printing okay, postage okay. Loss on sale of shares, guys, is that a business transaction? He's a retail trader. No. So this loss you have minused, you will have to add it back. Yes, 8,100, I'm going to add it back. And can I take this loss? Can I carry it forward to capital gain and subtract it there? Yes, you can take it to capital gain. But our exam question or this question only talks about PGBP. Alright. Other general expenses, okay. Now guys, very, very important additional information. It was found that some stocks were omitted to be included in both the opening and closing. That means opening and closing both are low. Only focus on the closing. Guys, if the closing is low, your profits are low. If your closing, I repeat this sentence, if your closing stock is low, your profits are low. So how much is it low by? By 18,000. So will you add 18,000? Yes. And the opposite for opening stock. If the opening stock is low, your profits are higher. So will you minus? Yes. So you don't need to buy hard both things, only focus on one. I will focus on closing stock. I'll repeat this one last time. Guys, if the closing stock is low, your profits are also low. Just remember this, guys, closing stock and profits go together. If your closing stock is artificially high, your profits will be artificially high. Here it was low, so your profits were also low, so you had to write the correct profit. And opening stock is the opposite impact. Next, salary includes 10,000 paid to his brother, which is unreasonable to the extent of 2,000. Guys, unreasonable, can you pay unreasonable? No. Salary, you minused it. Unreasonable, you will have to add it back. So I'm adding 2,000 under 40A2. The whole amount of printing and stationery was paid in cash by way of time payment to Mr. Ramesh. As printing and stationery was 23,200, cash is not allowed, 40A3, so I'm adding 23,200. Going to the next page. The depreciation provided in the P&L account was 1,05,000 was based on the following information. The depreciation in the P&L account 1,05,000, they're talking about this. Let's see if it's wrong or right. The opening balance of plant and machinery, that is the written down value as on 31st March 2021 minus the depreciation, was 4,20,000. A new plant falling under the same block was bought on 1st of July 2021 for 70. So will I add this? Yes. Full year? Yes. Full year. 2 old plants were sold. Will I minus this 50? Yes, you will minus this 50. Date for selling does not matter. Now guys, is he into manufacturing? No, he is into retail trading. I'm just reminding you, he's not into manufacturing. So will we check additional depreciation? No. So 4,20,000 plus 70 minus 50 is 4,40,000. On that, what rate will I take for plant and machine? 15%, which is 66,000. So can I take 1,05,000? No. So what I will do is I will add back 1,05,000 because that is wrong, and I will minus 66 because that is the right amount. Next, rent and rates include GST liability of 3,400 paid on 7th of April. Guys, here the GST amount is basically something that you will take a credit of, so you will not be able to take that. So you will have to add 3,400. And last, other general expenses include 2,000 paid as donation to a trust. Guys, donation to a trust, you will take a deduction, but not here, ahead in chapter 6A. So this one here you will again add. So these are the amounts you will add. I'm just taking you to the sum. You start with the profit, you add whatever you had to add, and you minus whatever you had to minus, and that is your right amount. 66,000 is depreciation. So exactly like this you will, this is a perfect exam question, guys. If you're understanding this question, this is exactly how an exam question is, but they ask you total income, not just PGBP. Alright, Sukhwinder is engaged in the business of plying goods carriages. Guys, is Sukhwinder always on the highway? He's always on the expressway. Yes. On 1st of April, he owns 10 trucks, out of which 6 are heavy. So this is 10 trucks, out of which heavy goods vehicles are 6 and others are 4 on the 1st of April. Out of the 6 heavy goods vehicles, the gross vehicle weight of such vehicles is 15,000 kg. So that means 1,000 per ton. These are all 15 tons. On 2nd May, he sold one of the heavy goods vehicles. So guys, 5 of them were there for 12 months, but one of them he sold on 2nd May. So one was there only for 2 months, April and May, even part of the month, yes. And purchased a light good vehicle on 6th of May. So light good vehicle, there was another extra one on May. So April it wasn't used, so 11 months. Guys, again I repeat, it should never be more than 10 goods carriages. How many did he own on the 1st of April? On the 1st of April, he owned 10 goods carriages. Did he buy one first or did he sell one first? He sold one first. So from 10, he sold one, that became 9. And then he added one, that became 10. Guys, what if he had first bought and then he had sold? Then he could not take 44A, because you cannot own more than 10 goods carriages even on one day throughout the year. Anyways, coming to the point. So first let's discuss heavy goods vehicle. He had 6 heavy goods vehicles, out of which one he sold. So the one he sold, I'm writing it here, was only used for 2 months, but the remaining 5 were used for 12 months. And light goods vehicle, he had 4 of them, and he bought one on 6th May. So that one he used for 11 months, and the remaining 4 he used for 12 months. Let's do the calculation. This new vehicle could be put to use. We don't check put to use, that is ignored. Alright. Now guys, let's see for heavy goods vehicles first. For heavy goods vehicles, 5 into 12 months into 1,000 per ton, there are 15 tons, so that is 15,000. Please tell me the amount here. And 1 into 2 months into 15,000. So this one is 30,000. And this amount you all will tell me. And for others, 9 lakhs. Okay. So this is 44A income. And for others, 4 trucks into 12 months into 7,500. And 1 truck into 11 months into 7,500. You will again do this calculation and tell me what is the amount in both these cases. So 9 lakh 30 plus these two amounts will give you your total income, yes, on which you will have to pay profit, 3 lakh 60. And is there another amount? 11 months into 7,500, which is 82,500. So basically 13 lakh 72,500 is the overall amount from this and from this. Now guys, what if he had maintained his books of accounts? Guys, what if Sukhwinder had maintained his books of accounts and it was lower than 13 lakh 72,500? Can he follow that? Yes, but he'll have to maintain his books of accounts and get them audited. Let's see here guys. Sukhwinder has maintained his books of accounts. Freight charges collected as 12 lakh 70. These are his expenses, depreciation, other expenses. So what is his net profit? 4 lakh 45 from this business. So guys, as Sukhwinder, what will you show? Will you show 13 lakh 72,500 or will you want to show 4 lakh 45? Which one will you want to show? You will want to show 4 lakh 45. So for this, you'll have to maintain your books of accounts and get them audited. And this other income, guys, will, whether it's this or this, other income will have to be added to both. Whether you are in presumptive income here or whether you're in normal, you will have to add 1 lakh to both. So it's your choice. As a smart assessee, you will choose this one. But for that, you'll have to maintain your books of accounts and get them audited. You're anyways maintaining your books of accounts, so you have to just spend on an audit. Alright. Guys, this is the next question. Question number 9. Raju is a manufacturer at Chennai. How many more questions? Let me check. There is 9. There is 10. That's it. Perfect. I don't think we'll be able to do more than that in today's session right now, but it's good we've done this. It's a big thing. Alright. Guys, I'm just reading. You need to tell me which all them is not PGBP. Sales is PGBP, closing stock is PGBP, opening stock is PGBP, purchase is PGBP, this also and this also. Guys, is dividend PGBP? No. Income from agriculture? No. So you'll have to remove this. They have been added, you will minus them. Admin, okay. SGST penalty, guys. Can I take that as a reduction? No. They've minused it, we'll have to add it. GST paid, can I take that as a deduction? Guys, GST, can you take that as a deduction? Generally, indirect taxes you can unless you take credit. So let's see what they have done. Unless they've given that you've taken credit of the GST. Just 1 second. Okay, they've taken deduction of GST. So guys, what you can do also for the exam purpose, whenever the indirect taxes are given, you can take only income tax not allowed as a deduction. Indirect taxes you take as a deduction. General expenses, okay. Interest on bank, on machine from term loan, this also, everything looks okay here. Let's see the additional information, guys. Very, very important. Let's see this. Following are the further information relating to the financial year. Admin charges include 46,000 paid as commission to brother of the assessee. The commission amount at the market was 36. Have you paid excessive? Yes, 10,000. You will have to add it back under 48(2). If you don't remember the section, don't worry, guys. As long as you get your concepts right, you will get good marks. For sections, you will of course get more marks, but if you can't, don't stress over it right now. The assessee paid 33,000 in cash to a transport carrier. Is that perfectly okay, guys? Yes. A sum of 4,000 per month was actually paid as salary to a staff throughout the year, and this has not been recorded in the books of accounts. Guys, a sum of 4,000 per month was paid as salary. Will you minus 48,000? Yes. Bank term loan interest actually paid up to 31st March 2022 was 20,000, and the balance was paid in November. Guys, only 20,000 will you have paid. How much have you minused bank interest? 60,000. Can you minus it only on payment basis? Yes, but the payment was made in November. So 60,000 you minused, you will add it back, and only 20,000 will be allowed. Balance 40,000 next year when it's paid. Housing loan principal repaid. This is section 80C, which we've not done. Interest on housing loan, all this is house property, guys. Let's see what we can do from house property. Guys, is there a self-occupied house property here somewhere? I don't see any self-occupied house property, but we'll see it from here. Housing loan principal repaid during the year was 50,000, and it relates to residential property acquired by him in 2021 for self-occupation. That means, does he have an SOP? Yes. Guys, SOP we've done yesterday only. What are all the values of SOP? Everything will be nil except 24B, that is maximum 2 lakh or 30,000. Interest was how much? 23,000. The housing loan was taken from Canara Bank. These amounts are not dealt with in the P&L account. Can I take 23,000 minus? Yes, you can. And 50,000 you can take under 80C, but we have not done that section, so ignore it right now. Depreciation, guys, is this. Let's check the depreciation. Will you get additional depreciation? Yes, because you're a manufacturer. Guys, what is the opening WDV? 14 lakh. Depreciation last year was 2 lakh 10. So 14 lakh minus 2 lakh 10 is 11 lakh 90,000. We start with that. Additions during the year used for more than 180 days. Will I add it, guys? Yes. Full year? Yes, full year. And total additions during the year was 4 lakh. Used for more than 180 days is this. So half year is how much, guys? Half year is another 2 lakhs. How do I know this? Because if they are saying that total is 4 lakhs additions, out of this 2 lakh is used for more than 180 days. So I'm assuming the other is not used for more than 280 days. Ignore additional depreciation. They have told us, so we will ignore additional depreciation. So how much will be the depreciation, guys? 11 lakh 90 plus 2 lakh, 13 lakh 90 into 15%, that is 208,500. And on this 2 lakhs, it's only 7.5%, that is 15,000. Perfect. So this is the question, guys. You will take the profit. and whatever needs to be added with the sections you will add, and whatever needs to be minused you will minus, and that's how you'll get your PGBP. But here I think they want total income, yes, because they've given 80C also, and income from house property as well. Perfect. Guys, going to the last question now. Mr. Tenzing is engaged in composite business of growing and curing coffee in Coorg. The whole coffee grown in his plantation is cured. Guys, grown and cured, not roasted, etc. So only 25% is business. First, find out the total income. Take the income minus the expenses. Opening balance of car 3 lakh. Opening balance of machine 15 lakh. They want us to calculate depreciation, which we will. Expenses incurred for growing coffee, expenses incurred for curing coffee, and sale value. So let's start with sale value 22 lakhs. Can I minus 3 lakh 10? Yes. Expenses. Can I minus 3 lakhs? Yes. What is the depreciation on car? Car is 3 lakh, on car 15%. So I can take 45,000 on car. Yes. On 15 lakh machinery, I can take 15% again. Yes. 2 lakh 25. Any other expense? Read, guys. Besides being used for agricultural operations, the car is also used for personal use. Guys, personal use is 20%, so I'll remove 20% from this. WDV balance of car is 45,000 into only 80% will be allowed. Guys, I hope you know what I'm doing. Guys, this depreciation on car, I had taken entire thing, but here they've said car is also used for personal purposes 20%, so I've removed 20% because personal expenses are not allowed. The expenses incurred for car running are 50,000. Again, from 50,000, I will take only 80%. That is 40,000. I can minus more. This is only for car, not for other expenses. This is my final income, guys. I'm just doing the calculation. 22 lakh minus 6 lakh 10 minus 36,000 minus 2 lakh 25 minus 40. So my final income is 12 lakh 89,000. How much of this is business, guys, and which rule are we talking about? We are talking about rule 7B for barista, and 25% of this is taxable. Yes, 3,22,250, and the balance 75%, that is 9,66,750 is agriculture income. Guys, this is the income which is taxable. Please look at this and please tell me, will the scheme of partial integration apply? Is he an individual, HUF, partnership firm, etc.? Yes. Does he have agriculture income greater than 5,000 and taxable income greater than basic exemption limit? Yes. So the scheme will apply. They will not tell you this in the exam, guys. They will give it to you in a very indirect manner. Let's check the answer. Here we go. 12,89,000 is what we got. This is also something that we got. They have not asked for tax, so they have not calculated tax. But if they ask for tax, remember, scheme will apply. Depreciation is this. You will only take 36,000, and this you'll take 2,25,000. Guys, congratulations. PGBP is done. I'm very, very happy that this is done and dusted. Guys, PGBP is a psychology. People get either very scared of PGBP or they get very happy that they know the concepts of PGBP. Face the challenges, face the section, face this question. We will do more in the next session from now. So exactly at 6 o'clock, we start the next session and then we continue. Thank you so much. I will see you guys now at 6 and we will continue. I know it's a shorter break, but unfortunately that's how it is. In fact, what we can do is we can log in. I will log in at 6. You all can come at 6:10 and we will continue. No problem, guys. So you all can come in at 6:10 and we will continue. Thank you and see you guys.